that SpaceX
carry on in just a second.
SpaceX spends $12 billion in launch rockets.
The obvious
NASA spends $8 billion.
is the follow-up that I would ask. We can keep doing this. I'll just keep going too.
So let's have fun.
The obvious follow-up that I would have is the same one that I'd have for anyone who came from the Harris campaign. I'd ask them the following. You had 4 years. Why didn't you do it then? Why is there that much more to cut now? Why didn't this happen in the first 4 years?
Oh, I don't think he understood the scale and scope of the rot. He started calling it the swamp. Like we all call it the swamp. Right now, why? Why do we call it the swamp? Because he called it the swamp. The problem is, it's not really that, it's just these employees of the government are part of the business of spending, right? It's like if I spend, and I assist, I make, the most you can make in the government is $183,000. Right, so I'm making $183,000, and I participate in giving this project of $20 billion, $10 billion to these 3 companies, right? And I work here for 5 years. Where am I getting my job next? I go to one of those 3 companies, and then I make a lot of money. So they all become lobbyists. The generals become lobbyists. All these people. The Defense Department spends $1 trillion, and they don't make the stuff. They buy it. From other people.
You said that it's important to have a lot of people who are in business come into the administration.
Absolutely.
A lot of people in business think that the plans as laid out are going to increase the deficit dramatically. They don't see how this actually decreases expenses, especially with tariffs that could potentially slow international trade, but also with the prospect of a lot of tax cuts. What are they all getting wrong?
So the tax cuts are already in the current world. Right? He's just going to make permanent the 2017 tax cuts. And then, so that's number one. Number two, he's going to encourage people to build here and pay taxes. Let's go over what Apple does right now. Here's a simple example. They make the parts in China.
Yeah.
They put the parts together in Taiwan. Then they wave their magic wand and it floats over Ireland. Of course it floats over Ireland because that's where Apple does its products. And then it comes to America and they make, I don't know, something like 3% profit in America. They pay corporate tax on 3% profit in America. And Ireland announces a massive budget surplus for their 5 million people. Ha, ha. So it's just not true. So the concept is have them pay their taxes in America, and that is how you fix America. You make it fair, you make it right, and you build
This is important. So no exceptions for Apple. No carves out for Apple.
There shouldn't be carve-outs for Apple. I spoke to Elon Musk and I said, if we do this correctly, Tesla's gonna have to pay more tax. You know what he said? If everybody's the same, that sounds great. He goes, I can't do it differently at Tesla if other companies are doing it, but if we're all the same and we're all paying the fair tax, then I am all for it. And I think everybody's all for it as long as it's, you gotta get rid of the arbitrage. Why is Ireland announcing a surplus? Oh, give me a break.
So
it's all our business.
15% is the corporate tax rate, the
If you build
president,
here.
if you build here.
If you build it here.
100%? Any inputs from other countries? What is the nuance to making products?
I spoke to a manufacturer. He says he does 50% here, 25% in China. How do we do it? If you tariff me in China, the Chinese backed companies, they will cover the tariff, so we'll get the money, but he'll be at a disadvantage. And we came up with this idea. If you build it here within 2 years, you can have a tax credit for any tariff you pay, as long as you move your plant within 2 years to America. You can have your money back, but build it here. See, American workers just haven't gotten a fair shake. Do you know American workers' life expectancy is 7 years less if you don't have a college degree than if you have a college degree? How is that possible? Because if you gut their factories and you take their jobs away, right? You know what it is? It's despair. It's despair. It's not the air. It's not the food. It's despair. Finally, Donald Trump is saying, I'm going to take care of the American worker. And anybody who comes up with this nonsense of that it doesn't work is just not actually studying it.
One thing that a lot of business leaders who I speak to are concerned about is they need stability. They need to have a sense of what the policy is. They need to have a sense of what the legal system is going to be for them to operate their business. One of their biggest fears right now with Donald Trump is that they're not going to have that certainty, with things being used as potential carrots or sticks to try to induce certain policies and a lack of understanding of what the structure is. How do you counter that?
I counter it with basically straightforward. Let's protect the American workers, okay? Let's build in America. Let's make it fair so the arbitrage where Apple doesn't run all their profits through Ireland, pay America their money. I think America could increase its revenues $250 billion a year by paying attention to the nonsense that corporate world does on global production. It's nonsense that Ireland makes money. It's nonsense that you build cars in Mexico. It's nonsense.
So,
okay?
Howard.
And the nonsense ends, you will be shocked about how great America is. You take $1 trillion of waste out, and then you focus on the country fairly. You're going to have the possibility of balancing the budget of the United States of America at the end of his term. No nonsense. I'm not making up old baloney. Elon Musk and I, if you don't respect the two of us, good luck to you, okay? It can happen because he's focused on not wasting the vast waste that is our budget and the way we run things.
That would be a big hole to fill and quite an accomplishment given the tax cuts that are on the table in this campaign. So we could talk about this all morning. We're out of time. It's good to see you. A spirited conversation, as always, with Howard Lutnick of Cantor Fitzgerald. Up next on the programme, we'll look ahead to retail sales. We'll catch up with Julia Coronado of Macro Policy Perspectives and Krishna Mamani of Lafayette College from New York City. Good morning.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Wrapping up earnings on Wall Street and basically no drama across the board, completing things this morning with Morgan Stanley. Equity futures on the S&P 500, 1 hour out from the opening bell, firmer by 0.1%. Similar move on the Nasdaq. Russell doing quite nicely this morning. The small caps up by 0.9%. With 60 minutes until the cash open with your morning movers, let's cross over to Danny Berger. Hey, Danny.
Hey, John, let me show you exactly what Morgan Stanley is doing this morning. Up 3.4% in the pre-market trade. Beats across the board, investment banking, trading, the crown jewel, wealth management also coming in strong, seeing over $7 billion in revenue and $7.5 trillion in assets for Morgan Stanley. So just a win. Again, another strong results from the bank. Also tracking this morning, Intel to the downside, down nearly 1.5%. You'll recall back in September, Qualcomm had made a preliminary approach about a takeover of Intel with all of its struggles. Qualcomm now, according to sources, say it wants to put the hold on this until after the American presidential election. It's unsure about antitrust, about relations of China, which are important for both companies. So the wait is being put on hold, Intel down in the meantime. Finally, Novavax, the biotech company, a huge decline for them, one of the biggest, 15% or so. They had a clinical application in for a combination flu and COVID vaccine. That is now being put on hold by the FDA because someone suffered what's called a serious adverse event. It was related to a motor neurological issue. The chief medical officer at Novavax says that he doesn't see any causality between the trial and that serious adverse event, and he's going to expedite getting the FDA the information to pick that trial back up again. John.
One to watch into the opening bell. Danny, appreciate it. Thank you. This time tomorrow, we'll be looking at one thing, in fact two. One is retail sales, the other is jobless claims, looking for clues on the health of the U.S. economy and the Fed's path ahead. Julia Coronado of Macro Policy Perspectives writing, Fed speakers since the better-than-expected September employment report have expressed no regrets on the 50 basis point initial rate cut, stressing that it reflected a need for recalibration. The Fed is right to recalibrate when times are good, rather than wait for mass layoffs. The brilliant Julia Coronado joins us now for more. Julia, welcome back to the program. It's been far too long. Let's talk about the next jobs report, not the last one. Governor Waller's all come out already and set the bar just a little bit lower, given some of the effects we could get from hurricanes and a strike over at Boeing. How much lower do you think the bar needs to be reset going into November?
Look, I feel like a 25 basis point rate cut by the Fed in November is pretty much, I don't want to say a lock, that's too strong, but the bar is very high to deviate from that. The data is going to be messy. We all know that. It's going to look weaker than it actually is, and it's just going to take some time to sort it out. I think the Fed has seen enough in the backward-looking data that the economy is solid enough that they don't need to worry about it falling off a cliff, but nor is it overheating in a way that they need to maybe consider a pause. So I think we're still 100 basis points at least from any concept of neutral. They don't need to be in a hurry, but nor do they need to be overly cautious or reactive to any inflation print.
Waller did put a number on it. He said it could be around 100K. We could take off 100K from the number. Are you in a similar ballpark with you and the team? Is that what you're looking for?
Yeah, I mean, it's hard to calibrate right now. Honestly, we're still gauging from jobless claims and other reports about how much disruption there's going to be. It's very limited ability to see that in advance. So again, it's just going to take some time, but 100K, I mean, certainly given the Boeing strike, which we can calibrate, that sounds about right. Somewhere in that ballpark. It could be bigger, it could be smaller, and then it'll wash back in the November jobs report. So we're just going to have to see how that sort of nets out over time.
Julia, what are you looking for in retail sales tomorrow? And I say this, especially after bank earnings that demonstrate just how solid consumers are and the ability that they have to actually continue to lever up.
Yeah, lever up is an interesting term. Consumers really aren't borrowing excessively. Debt to income actually in the latest flow of funds report went down. So this is not a consumer that's necessarily relying on debt to finance its spending. I think what we have is a dual consumer, sort of increasing divide in the consumer sector, where you've got people that maybe didn't get as big a raise this year. They've got a tailwind from inflation, but they're very budget conscious. We hear that from retailers. So they're spending, but very cautiously. And then we've got the upper end of consumers who are feeling really good because net worth is very high. Financial conditions are easy. And they're maybe spending a little bit more, but they also have the means to do so. So on balance, you've got a median consumer that's probably a little bit more stretched than they were a year ago, maybe a bit more cautious. But on the other hand, you've got high-end consumers that are doing just fine, thank you very much. And that's enough to power the economy forward. So we've had a string of very solid retail sales reports. There's no signs that we're of some sort of imminent collapse. I think expectations for the holiday season are that it'll be fine, not a blowout, not a disaster. So I think the economy is kind of in a good, solid zone.
Which is certainly what we're hearing reflected by a number of Fed members who want to keep it that way and want to keep cutting rates in tandem with inflation coming down, which really brings me to this question of why do you think that people are so confident about the path of disinflation now versus, say, a month ago? What has changed to make the prospect of inflation remaining at this level or actually to go higher? Why is that now off the table?
I wouldn't say it's off the table. I would just say the chances of that keep going down. The composition of inflation, and I think President Daley noted this yesterday, one area that's really improved this year is super core inflation, particularly in the Fed's preferred PCE measure, really has kind of come off that stickiness. It was in a sticky zone. It wasn't clear how quickly that would moderate. We are seeing progress there. We are seeing progress gradually in the shelter component and housing inflation. So just the composition of inflation looks a lot better, a lot healthier, a lot more like it did before the pandemic. And so the risks of it getting stuck too high are just going down. And then if you think about things like commodity prices, look at how many global shocks we are absorbing, one after another. And yet commodity prices really, it's the dog that hasn't barked this year. It's gone up and it's gone down, but really we're still in the same zone on energy prices we've been all year. So yes, there's risks, always risks, but I think a cooling China has really taken the edge off of what we might have otherwise seen in terms of input costs coming through from those global shocks.
Julia, we are less than 4 weeks, about 3 weeks away from the U.S. election. And a big question is, the U.S. is on solid footing, but how different are the scenarios in terms of the policy frameworks after November 5th? What are you looking for? How different could these two economic scenarios be according to your models?
Yeah, it's an unusual divide for most presidential elections. It's a little bit around the edges, right? A little bit more tax cuts versus spending. We're talking about a very different scenario in a Trump 2.0. A Trump 2.0 wouldn't look like a Trump 1.0. The staffing wouldn't be the same. The blueprint for policy is certainly a lot more extreme than what he was able to do in his first term. I see it as a pretty disruptive scenario. His plan is to invoke a global trade war from the get-go and to be, turn off that flow of immigration that's been quite a tailwind for the macro economy. And not only turn off the flow of new immigrants, but even mass deportation of current immigrants. And that really has been the saving grace of the U.S. labor market. So under a Harris administration, I think we keep rolling along. It's pretty much status quo. The composition of Congress is going to matter a lot under either scenario. But I would say, the Trump 2.0 scenario is a much more uncertain scenario, much more disruptive, not just for the U.S., but for the global economy.
Julia, appreciate your view. It's good to catch up. Julia Coronado there of Macro Policy Perspectives. Looking ahead to the economic data tomorrow morning, 8:30 Eastern Time, jobless claims and U.S. retail sales. With us around the table, Krishna Mamani of Lafayette College. Krishna, good morning to you. Yeah. You think the Fed's got itself in a tough spot? Why?
I think when they keep talking about data dependency, it's a problem. Rates are not at 3%; they are at closer to 5%. Inflation is meaningfully lower, if not trending lower. Worst case, it's not. It's stable. in that scenario, they have plenty of room. So I think talking about data dependency for the second cut gets themselves in a position that they have no reason to be in.
Governor Waller brought up the prospect of this jobs number being a whole lot weaker. And he also pointed to the fact that the jobs number drops in a quiet period. The quiet period has been a bit of a problem for this Federal Reserve. He even acknowledges that and basically said, alluded to it, that he hopes other people will pick up the mantle and explain why the jobs number is so much weaker than it may well have would have been. Now, I'm wondering whether we've got a problem here. And if the problem is the length of the quiet period or the problem that they're data point dependent, we need to come out and explain in the quiet period what's actually happening. Which one is it?
So I think this series of data is going to be so messy that deriving any information out of it is going to be tough. It's going to be, anyone who kind of comes up with an explanation is basically trying to come up with something to fit their priors. That's how it'll definitely play out for them. But I think after cutting 50 basis points in the last go around and having laid out a path in their SEP as to what they are going to do, doing something very different based on this data set, I think will probably show their muddled thinking more than anything else.
At this point, does it matter? If they cut rates again this year, is that basically just going to support this bid into equities? Because ultimately, it will just show that this is a Federal Reserve that has a bias toward cutting rates, wants to see a durable, landed economy, and frankly, sees a lot of room to cut.
Well, so none of that is wrong, right? This is a Fed which is hell-bent on cutting rates because rates are too high. And things are going their way, and they want a soft landing. So if that's how they execute, that's what they have laid out in the SEP. I don't think you can hold the Fed, kind of hold that against the Fed, because it is the right policy move in the current context.
So where's the uncertainty for stock investors? Where is sort of the lack of clarity around the Fed's path of travel and where they're going that will make certain data points more important than others for people who are bull on?
Well, so I think the path of the Fed over the next few quarters, I think, is pretty well determined given where rates are and where inflation is. And I think what would be uncertain for, it probably is far more uncertain for bond investors than it is for equity investors. I think equities, as long as growth is decent, profitability is good, and the Fed is inclined to cut rates rather than raise rates, I think that path is pretty defined. It's really the bond investors who have to worry about, which is, is 4% the right level for bonds in the current context if inflation picks up slightly because of slightly better growth and slightly better employment levels? I mean, that doesn't change the equity outlook. That changes the bond outlook meaningfully.
Do you think about it in the context of the U.S. economy or the global economy?
Well, so I think that Julia was making a really good point, which is the U.S. economy is able to kind of drive itself, or the markets can drive itself off of the U.S. economy because the global shocks are very well contained. That is, there's nothing really happening in Europe. There's really nothing happening in China that is meaningfully different than the trend that we have seen. So I think from that standpoint, our markets, we can figure out where they are going based on the U.S. economy and the U.S. rate.
Well, this is what I'm trying to figure out. The U.S. economy can basically operate as a bit of an island. Mm-hmm. We're talking about a global fixed income market, and what happens in Europe, what happens in China, has some consequences for where that 10-year yield trades, surely.
Oh, absolutely. I think if China was going into a deflationary cycle, and they were not doing anything. Yeah, well, it is, but the path of deflation is much slower than I think we have imagined over the last few years. And they are, they're not doing much to revive it, but they're doing something. So in that context, thinking of a savings glut and taking rates to 2%, I don't think that is in the cards anytime soon.
At the same time, does it make you very confident on being bullish the dollar? I do wonder, based on your call and based on some of these rate differentials, whether that's an increasing kind of focus for people.
Well, I think if the U.S. dollar is going to remain strong, it is going to be because the U.S. economy continues to do well rather than level of rates. So I think I sincerely believe that, because the difference between the U.S. economy and every other large economy in the world is so substantial that in that context, unless we screw it up royally from a policy standpoint in the new administration or something, or in with respect to the Fed, I think the dollar has enough support from the economic picture that we are seeing unfold in front of us.
So what are you doing right now?
Well, so, what we are doing is basically nothing, which is, and there's a reason for that, is because, the way you don't do anything is actually expressing a view, which is you're not, if along with not doing anything, you're not rebalancing.
Are you just holding on to the desk, as Julian Emmanuel told us,
I
and
think
waiting for
we
the
are
election
looking
to be
at
over?
the screens and feeling really good about what the equity market is doing and not cutting the equity exposure as equity exposure has increased.
You're allowing the equity portion of the portfolio to take on a bigger role in the overall portfolio, correct?
Exactly.
And why are you so much more comfortable with that?
Growth. I think yesterday when somebody asked Moynihan whether it's soft landing or no landing, I think he was basically saying the same thing for both scenarios, which is I don't think people confuse soft landing and no landing. It's really the same scenario. It's exactly, as long as that continues to unfold, I think we are in a good shape.
We typically talk about a 60-40. Are you questioning the risk mitigation characteristics that treasuries can provide, given the risks on the table into 2025?
I think Howard answered that question for you when he was here. With the plans that they have, if those unfold, I think the uncertainty with respect to bonds is quite substantial, and I think counting on bonds to provide a significant level of counterweight to your equity portfolio. I think cash does much better than bonds in this context.
Are you saying that essentially the reinflation risk is the biggest potential risk right now, that potentially is a difficult one to hedge against, other than just going again into stocks?
Yes, I think for bond investors, the reinflation risk is basically unhedgeable at the moment. That is, you can from a short-term perspective, you can probably put on some hedges, but that's not going to solve your real long-term political problem that you'll be facing. So
I'm pleased you've said this. This is refreshing, and I'll tell you why. We've heard a lot of boilerplate nonsense on this program around the election. A lot of people coming on and saying it won't make much difference. Look back to previous election cycles, stocks go up to the right. I think this is very, very different. What's on offer here? And I'm not going to say which one's the better one. The American people get to decide that. But there are two very different visions of policy in America for the next 12 months, surely.
Oh, absolutely. I think, and Julia was kind of addressing that particular issue, that the two policy paths are very, very different. They may have the same outlook for equities. They sure as hell are not going to have the same outlook for bonds.
So let's look at Kamala Harris for the bond market.
I think Kamala Harris for bond market is probably not as bad as Trump for the bond market, if the current set of policies that are on offer get implemented.
Krishna, it's good to see you. Thoughtful stuff. Thank you, as always. Krishna Mamani there of Lafayette College with an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Shares of LVMH slumping more than 4.8% in the Paris trade. It reported an unexpected drop in third-quarter sales and warned of an uncertain economic and geopolitical environment. It was the first sales decline since the COVID-19 pandemic, driven by slumping Chinese demand. Vice President Kamala Harris is leading in political donations, but former President Donald Trump has picked up some big-name support. Elon Musk poured $75 million into the super PAC he created earlier this year. Billionaire Miriam Adelson added $95 million into her super PAC supporting Trump. And venture capitalists Mark Andreessen and Ben Horowitz each donated $2.5 million to a pro-Donald Trump super PAC, according to the latest filings with the Federal Election Commission. And Citadel founder Ken Griffin has found a buyer for a Chicago penthouse, but the sale will come at a loss. Griffin is selling his 7,500 square foot 38th floor property for $11 million. He bought the unit back in 2017 for around $21 million. He had spent nearly $60 million on the penthouse, along with 3 other units in the building, in what became Chicago's largest real estate deal in its history. Griffin, though, never lived in the home. That's your brief. John.
I think Kenny G's going to be okay. I think he's going to be all right. Kenny, thank you. Appreciate it. Up next on the program, we'll set you up for the day ahead. You're watching Bloomberg TV.
the Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From New York, 39 minutes out from the opening bell. Equity futures shaping up as follows on the S&P 500. Just a little bit firmer, much more so on the Russell. The small caps up by 0.75% in the bond market. Rally on. Yields lower. 10-year down by about a basis point, down by close to 7 basis points in yesterday's session. Closed, of course, on Monday. The move yesterday encouraged by what was happening, not just in the equity market, the risk aversion, but also developments in the commodity market. Leads to a drop of more than 4% on Tuesday's session.
Number one, my question is at what cost? Because that catch-up game could pay some cost to the margin line there.
Size might be a piece of it. Acquisitions in the timeline, given the fact that that has been a path that they've taken in the past.
Perhaps. I mean, that's something we've seen a lot of Morgan Stanley already do. They've digested a lot of those acquisitions to the extent they do more. You can't imagine them doing another major one. Goldman, we've seen how that story played out. So these acquisitions for banks are not easy. They're distracting in some level as well. So do you want to acquire people or do you want to acquire talent, acquire businesses or talent? And at this point, we're looking at an investment banking cycle at the brink of coming back, Lisa. It's just there.
So we've wrapped up the big earnings season. What's your big takeaway?
There's a lot less fear under the surface. But you have JP Morgan and Morgan Stanley. I was joking this morning, the Morgans are coming home. They're both trading at 2 times earnings. Guys, is it bad that it's not even 9 a.m. and I'm wondering what the Morgan Stanley cocktail party looks like tonight? That's how well that they're doing.
You're skipping the interview and going straight to the cocktails.
I'm gonna skip those. It's been a long 24 hours. But they have to be celebrating over there. These are standout numbers by any metric. Now, if you're not one of the biggest of the banks, does it look this good? You're seeing that bifurcation continue on even more.
Shonali, it's good to see you. Looking forward to the program alongside Kelly Granford and Matt Miller in just a moment. Look out for this interview, a sit-down conversation. Shonali Basak together with the Morgan Stanley CEO, Ted Pick, at 10:30 Eastern Time. Coming up tomorrow on this program, we'll catch up with Russ Kostrick of BlackRock, Mohammed Al-Erin of Queen's College, Cambridge, David Leibovitz of JP Morgan, and Dana Peterson at the Conference Board. The Conference Board, the data coming out of that really, really important, the labor differential. Jobs hard to get versus jobs plentiful. They is moving in the wrong direction over there. We'll get Dana's thoughts on that tomorrow morning. As we count you down to the opening bell, equity futures on the S&P 500 just about unchanged, and the bond market yields just a touch lower, but down a basis point, 4.02% on a 10-year. From New York, that does it for us. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Is on. Everything you need to get the the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
All right, after a drop yesterday, let's see if we can rally back up today. 30 minutes until the start of trading. I'm Matt Miller.
I'm Shonali Bassett.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, beats across the board for Morgan Stanley in the third quarter. And next hour, my interview with CEO Ted Pick.
And chip indigestion. Intel gets hit with a double dose of bad news, and a tepid outlook from ASML sparks a global rout in the sector.
And Trump's beautiful tariffs, his words, not mine. Former President Donald Trump defending his plans to overhaul the U.S. economy in a Bloomberg News interview. The latest on the road to the White House. All of that and more coming up. But let's take a look at where markets are trading with 30 minutes until those bells ring. Pretty quiet right now. Of course, we had wipeout yesterday when it comes to the S&P 500, when it comes to the NASDAQ 100. You think about that chip indigestion that Matt was talking about, shaking it off at the moment a little bit higher pre-market, and I stress a little bit. And then you take a look at the bond market. You saw a big haven bid yesterday. Some of that buying momentum continuing today, pushing 10-year yields down to 4.02%, Matt, but still above 4.
Shake it off. Shake it off.
That was pretty good.
It's going to be hard for ASML. Look at this chart. The worst drop in 26 years. It's only been a publicly traded company for 28. Tepid is a very nice way of saying that bookings were less than half of what analysts predicted. An absolutely huge miss, and it's going to be difficult for the entire chip sector to shake that off today.
There's some other things shaking things off on the upside. I don't know. We're looking at some stocks under the surface. Morgan Stanley now up nearly 4%, up 3.8% pre-market. Sales and trading revenue beat estimates in the third quarter, and assets under management topped $7.5 trillion. Watching Novavax as well, down after the company said the FDA has placed a clinical hold on its application for a COVID-flu combination and standalone flu vaccine candidates. Ooh, down 16.3% pre-market. Intel also dropping after sources told Bloomberg that Qualcomm is likely to wait till after the election to pursue a bid for Intel. Intel down now more than 1.4%, Matt.
All right. A lot of chip stocks we're going to be talking about today, but really none matters as much as NVIDIA. Yesterday it was down 4.7%. I think that made up for 42% of the S&P 500's drop. I was reading DataTrek's note today.
That was an ouchie.
It's just a massive, massive company. It's actually bigger than all but 2 countries in the MSCI World Index.
As NVIDIA goes, the rest of the market goes. We saw that yesterday, but it wasn't NVIDIA that started the fire. Of course, it was ASML. Just amazing. Of course, their third quarter bookings coming in at less than half of what analysts had forecast. It'll be interesting to see what TSMC reports tonight after the bell, but chips really in the sort of center of the market mind right now.
Yeah, and you think that you overlay it with what's happening in the geopolitical and the political as well. That fact that Intel, any deal might be on hold until after the election cycle just puts a whole cloud of uncertainty, especially as the Biden administration starts to clamp down on where things are sold as well.
Right, if Qualcomm's going to make a deal, they should wait till after earnings too, because if it's a disappointment, they're going to get a much better
valuation.
Get it in the bargain bin.
Let's talk about all this and more with Verdens Capital Chief Investment Officer Megan Horniman. Megan, a down day yesterday. Looks like we could rally again today. And frankly, we've had a pretty fantastic year. We are in the first week of the third year of this bull market. Do you think it ends up?
I think it'll be pretty sideways between now and I think the election. I mean, the only thing we really have right now is earnings. But getting past the election, I think that the market is what's proven to us in the past is, historically from election day to the end of the year, market returns tend to be relatively muted. I think we can end up for the year, obviously, we're up in the double digits right now. But I think it's going to be after the election, I think it's going to be a much more volatile path to the end of the year. There's a lot of uncertainty, not only from, like I said, the election side, but then also the Federal Reserve as well. What can they do at that November and December meeting?
And Megan, I'm looking through your notes. I love this line. Be thankful for price to earnings multiple expansion. And I mean, this is something we were talking about yesterday. I think it was Mike Wilson who made point that this whole rally has just been built on multiples expanding. Interesting to see you coming out and saying maybe that's not a bad thing.
Well, if you look at the total return over the past 2 years, the majority of that, I think over 70%, has been made up of PE expansion. That's, be thankful for what you had there. We're not so optimistic that going forward, you're going to see that type of PE expansion. You're entering, as we mentioned, the third year of a bull market. The returns tend to be relatively muted during that time. We're going into the first year of a presidential term next year. And what we tend to see is that's where you see the majority of recessions happen, in the first year of a presidential term. So I think that this PE expansion that we've seen, be thankful for what you've gotten thus far, but we're just not sure we're going to be able to, this can continue at that pace over the next year.
Megan, you had mentioned you think the market's going to go kind of sideways until the election, but when do you think that uncertainty starts to clear up? Is it through the end of this year, or do you have to wait until well after the inauguration, whoever it is, to know where the direction of travel is?
I think it's going to be into next year, but the bigger challenge next year is the economy. That is the bigger concern that we have right now. So is the Fed what is the Fed going to be able to do to help the economy, and what are they not going to be able to do? So the two biggest drivers I think we're going to be watching when we go into next year is not only the economic side of things, but don't forget inflation. Most people have forgotten inflation, but what we've seen lately is that inflation that progress we've seen is kind of stalling. So these aggressive rate cuts that are priced into the market, how much can the Fed actually do into next year?
You're sounding fairly cautious, Megan, and I know we've come pretty far pretty fast. Where do you put your money if you want to be conservative?
So we are cautious. Look, over the long run, we're always going to like equities, and we're always going to be looking for, buying on the dip type of mentality when the valuation is right. What I mentioned earlier with the PEs right now, especially in the U.S. large cap space, are just way too high. It's way too expensive in our opinion. Instead, what we're doing is we're sitting with a healthy cash position, but we're looking outside of the U.S. as well. We've recently added some exposure into the developed international markets. We think over the long term, and we're long-run investors, that valuations there are historically attractive compared to the U.S. So take a look outside of the U.S. As we get through next year and we see what kind of environment we are for the economy, take a look maybe at some small and mid-cap stocks. But there's no rush right now. Cash is not earning you what it was 3 or 4 months ago, but it still is earning you a decent return that you have that flexibility to be patient, be diligent, wait for the market to give you valuations that are giving you enough reward for the risk you're taking on.
So still a fine environment to clip coupons in, sitting in cash. I hear you there, but let's talk a little bit more about that global view that you have, because a lot of focus has been paid to China. We've seen a lot of volatility in that market, of course. The finance meeting that we got over this past weekend, maybe disappointing some of the biggest bulls. When you're looking outside the U.S., even when you're looking to develop markets, how closely do you need to be paying attention to China?
You do. I mean, China obviously is a big impact, especially not only here, but in the developed markets. But the one thing that you have to look at that's more important to us is what's priced into the market. So is the market already priced in a pretty weak Chinese environment, and what that may mean for Europe and the UK? We think it has when you look at valuations. Also, we think from an international standpoint, we're focused more on the developed international markets, because as you saw with the UK inflation now dipping below their target, they're going to have more flexibility with interest rate policy than I think we do here in the U.S. to be able to help their economies.
You know, Megan, it's interesting. I'm taking a look at just indices here in the U.S. as well. And one thing that I find fascinating over a three-month basis is that, yes, you have the S&P higher. You've had the S&P equal weight higher. You've had the Philadelphia Semiconductor Index over that time frame down 11%. How much is the weakness you're seeing kind of in that chip sector, semis, AI trade going to spill over?
I think you'll eventually see some of that spilling over, because obviously that's been what drove this market so high in this recent bull market. If you look at the 5 names that are making up about 100% of the total return that we've seen in the bull market, that can spill over. I think that there's just, people are shifting from the semiconductors going to maybe some other areas that have lagged, but don't forget that some of these other areas are also sensitive to the economy, and that's what we're concerned about going forward. So we think you'll see some more valuation correction across the board. Obviously, it'll be more concentrated in that tech and growth, but value even has caught up quite a bit now, so I think you could see that spill into that area as well.
First of all, Shonali, you know that Bloomberg style is indexes.
Actually, you're wrong.
Type style go on the terminal, and you'll see Matt Winkler, who invented Bloomberg
Oh my God,
News.
what a callback.
Secondly, you ask about chips, and we're sitting here on a day when we got more big bank earnings. Why don't you ask Megan about the banks?
Well, yeah, I guess, it's funny. Katie makes this point that the banks are only
13%.
13% of the S&P 500. That's all financials, actually, not just the banks. How much does the earnings from the banks, how much do the earnings from the banks really matter at this juncture?
I think they matter in every earnings season because it kicks off earnings season. So it's really that what's the view, what's the tone going to be for earnings season? And banks, they've done from the past few quarters, and after the pandemic, they've really increased their loan loss reserves, and they've been kind of cautious on the consumer. They've warned of the increase in delinquency rates, and what we're seeing is they're starting to reverse that a little bit. I'm not taking that as a sign that the consumer's in fantastic shape. There is a report out yesterday from the Federal Reserve showing that consumers are the most concerned about being delinquent on a payment that they have been since the pandemic. So I'm not taking that as an overly optimistic thing, but banks are also notorious for overestimating net losses and then being able to come back as we get further into the economic cycle and take some of that back, and it actually works in their advantage when it comes to earnings. I think it's good. I think the banks, what we're seeing with the kickoff is great, but I want to get further into earnings season when we get, like we mentioned, the chips, some of the technology, and then specifically when we get to that retail side of it towards the back end of earnings season.
All right, Megan, always great to speak with you. That, of course, is Verdance Capital's Megan Horniman. Thank you. Meanwhile, let's take another check on these markets. Less than 20 minutes ago until the opening bell rings. You can see, again, quiet, this market trying to recover from that big downdraft that we saw yesterday. We are green, but of course, you know, you can go ahead and call that unchanged. In any case, let's find some more action besides the small caps. Let's look under the hood right now with Abigail Doolittle.
Yes, well, beneath that relatively benign surface for the S&P 500 and the NASDAQ 100, we do have lots of outsized movers, including the shares of Cisco Systems, up nearly 2%. This is Citi has upgraded the shares to a buy on AI potential, plus a valuation gap to the other networking peers. Turning to United Airlines, this is an interesting one. So earlier, these shares had been down, now up about 1.4%. They put up a good quarter, but they have a similar commentary to Delta, saying that they think that there could be less travel around the election. It's not quite intuitive or logical to me as to why that would be the case, maybe internationally, but domestically, I'm not sure. But it is interesting. And then speaking of the election, after yesterday's rather robust interview with Donald Trump here on Bloomberg Television, we do have the shares of Trump Media and Technology up 5.9% over the last 15 days, or roughly 3 weeks, Shanali. This stock up more than 100%. One way for the market to say that they do think that the former president may have better odds of winning in November, but it's not over till it's over, so we've still got some time to get there.
Certainly the Trump trades throughout the week, very interesting to keep an eye on. Abigail, we thank you so very much. Now coming up, Republican challenger Donald Trump defends his economic policy. We're going to play you part of his conversation with our editor-in-chief next. And in the next hour, catch my interview with Morgan Stanley CEO Ted Pick, taking his victory lap on the earnings today. Plus later today, exclusive interview, of course, with billionaire investor Stanley Druckenmiller at 12 p.m. Eastern. It's a rare conversation. We'll see what's on his mind. Stick with us. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Former President Donald Trump loves the word tariff and thinks Fed Chair Jerome Powell has the easiest job in Washington. He sat down with Bloomberg editor-in-chief John Micklethwaite at the Economic Club of Chicago.
Because we're about growth. She's got no growth whatsoever, and we're all about growth. We're going to bring companies back to our country. You look at, even today, as I was driving over, I see these empty, old, beautiful, like steel mills and factories that are empty and falling down. Some have been converted to senior citizens' homes, but that's not going to do the trick. And we're going to bring the companies back. We're going to lower taxes still further for companies that are going to make their product in the USA. We're going to protect those companies with strong tariffs, because I'm a believer in tariffs. I'm not sure that you are. I don't think you are, but I congratulate you on your career. But to me, the most beautiful word in the dictionary is tariff. And it's my favorite word. It needs a public relations firm to help it, but to me, it's the most beautiful word in the dictionary.
Tariffs, do you think that will bring in the revenues? To use another bipartisan group, Pearson Institute, they say they only bring in $200 billion. That is that's barely the cost of 2 of your promises.
Yeah, but that's like, for what company are you talking about, okay? Look, I've brought in with tariffs, and I was just getting started. Then COVID came, and we had because I tell you what, I did a very good job in COVID. Nobody knew what the hell it was. I call it the China virus because I like being a little more accurate. But when that came, but we got hundreds of billions of dollars just from China alone, and I hadn't even started yet. But tariffs are two things, if you look at it. Number one is for protection of the companies that we have here and the new companies that will move in, because we're going to have thousands of companies coming into this country. We're going to grow it like it's never grown before, and we're going to protect them when they come in, because we're not going to have somebody undercut them.
That was Donald Trump speaking with Bloomberg's editor-in-chief, John Micklethwaite. Joining us now is Kayleigh Lyons, co-anchor of Balance of Power in Washington. Let's talk about the reaction to the speech. Obviously, you saw him in a room at the Economic Club of Chicago, similar to how he addressed the Economic Club of New York really a number of weeks ago. How did the crowd receive him? And was the crowd really slanted towards this kind of pro-business mindset that would have been otherwise afraid of a Democratic administration ahead and what it means?
Well, I think we heard a bit there of how the crowd largely was reacting to him, Shonali. It did seem to be a friendly crowd. There was a lot of applause, laughter in some instances when Trump threw laugh lines out there. And we do know that there was a substantial portion of Trump staffers and those affiliated with the former president and his campaign that were in the room. That said, of course, it is the Economic Club. These were business-minded individuals by and large, many of whom might like some of these ideas, including lower corporate taxes for companies that make goods in America and lower taxes across the board that Donald Trump is advocating for, even if economists do contend that that could be deficit additive and ultimately that his tariff policy could also fuel inflation. All that said, I was not in the room, so I can't speak to the exact composition and who exactly was clapping. I was just watching it alongside all of you here on Bloomberg TV. But I would just point out that typically if you're going to listen to someone speak, you might be more in favor of the kind of ideas they are putting forward, like when Matt Miller goes to a Fish concert, it's probably because he likes fish.
Fair point. Can't wait for the New Year's run at MSG. I was at the Economic Club of New York when Trump spoke there. I was also surprised by the support he had at the ECNY. Some of the most important people on Wall Street I saw there. Is he doing better maybe than we think, Donald Trump? I mean, he mentioned some of the early voting polls yesterday, and certainly in the betting markets, he's really turned it around.
Yeah, we have seen a change in the betting markets, and we've seen across polling from New York Times, Siena to other polls that things do seem to be tightening at this stage in the race with less than 3 weeks to go. I would point out that what we have seen in the last few weeks is also coming as we've had no real clear catalysts. When we look at Kamala Harris's candidacy, the person running against Donald Trump, she repeatedly had events that were helping to build her momentum. First, the fact that she became the presumptive nominee, then she had the selection of her vice president, Tim Walz, then a convention, then, of course, the debate against Donald Trump. in which she predominantly was seen as winning. Since that debate, though, there hasn't been any other kind of event like that that has been able to continue to propel that momentum forward, which may be contributing to some of the tightening that we are seeing and why the candidates are now fanning themselves out across a number of mediums and a number of different networks to do more interviews like the one we saw Trump do with Bloomberg yesterday. Kamala Harris today is going to be on Fox with Bret Baier as she tries to reach out to more Republican voters who may not be in favor of Donald Trump.
Well, Kayleigh, we don't have much time left, but that's exactly where I want to go. The fact that Kamala Harris is sitting down with Fox News, you think about the criticisms that have been levied at Kamala Harris, that she hasn't made herself available enough to maybe not friendly media. What are we expecting to sort of hear tonight?
Well, she could face some tough questions on the issues on which she is weakest, the economy and the border, but we should also expect a more moderate version of Kamala Harris as she tries to attract some in the Republican Party onto her side. She has been attempting to create a sort of permission structure for Republicans to cast a vote for her rather than Donald Trump. We see that evidenced in her touting the endorsement of a number of Republicans, including former Congresswoman Liz Cheney, who has campaigned alongside her in Wisconsin just in the last few weeks. So that's really what it is about doing, is reaching across the aisle, trying to bring more voters to her cause. And we're seeing her do that with other demographics as well, including black men, with an appearance on Charlemagne the God yesterday.
All right, Kayleigh Lines, thank you so much. Of course, looking forward to that interview with Kamala Harris on Fox. Of course, just a little bit more than 24 hours after Bloomberg sat down with Donald Trump. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Well, the early release of ASML's earnings yesterday obviously sent a chill through the entire chip sector, and now we're getting, of course, the earnings call. So first of all, it kicked off with the CEO apologizing for the early earnings release, but when it comes to the actual details that spooked the markets, of course, remember, it was the third quarter bookings coming in at less than half of what analysts forecast that sent the stock to its worst day's performance in more than 20 years. When it comes to what we're getting on this call, so the CEO says chip industry growth drivers still intact. We heard from the CFO as well, saying that they see China for about 20% of total revenue next year, and that long-term trends are strong. So you take a look at what the stock is doing pre-market, of course, still down, not exactly getting a lot of comfort on this call.
You can see the live trade actually in Holland.
Yeah,
so,
if we pull that up, that would be good as well.
Their main listing, yeah.
Shares down about 3% right now after yesterday's wipeout, down about 16%. And of course, we saw what that did to the overall U.S. indexes as well.
I thought it was interesting yesterday to hear that they said they're still in recovery mode. And you think about the AI chip demand, they can't even keep up with it. The problem is this is a bifurcated business, right? So if you're making chips for cars or industrial or PCs, it's just not as good. They said on the call that China will be 20% of their revenue. Last year, China was like 27% of their revenue. So they're ramping that down a little bit.
Absolute first question on the call. And you do see pairing of losses here. But again, that two-day chart was pretty brutal, wasn't it?
Yeah, absolutely. Of course, TSMC, which buys machines from ASML, reports later today. Going to be fascinating to follow that. But stick with us because we are less than 4 minutes away from the opening bell.
We are moments away from the start of trading on this Wednesday morning. This is Bloomberg Open Interest. I'm Matt Miller. Take a look at futures. Absolutely unchanged on the S&P right now. NASDAQ futures not doing anything as well. We had a big drop in the chip stocks yesterday, and the positive bank earnings didn't really turn out to boost financials either. So not much going on in terms of the big indexes or the bell ringers. We have RXO. I guess they're celebrating an acquisition of Coyote Logistics. Here, apparently, the Food Network is ringing the bell because there's a wine and food festival, which is going to be pretty delicious. But the market isn't doing a lot right now. In terms of the index, we're going to see no direction here. Katie, where do you think we're going to go at the end of the day?
Yeah, the Wine and Food Festival, surprisingly, not injecting much life into these markets. It feels like we've seen a lot of quiet opens over the past couple weeks and then a lot of fireworks by the close. So we'll see right now. But at least the arrows are green. Of course, we had that wipeout yesterday. You have these stock markets trying to regain that rally momentum, a little bit higher when it comes to both of these indexes. But the small caps, that was your outperformer yesterday as well. Still a down day, but less so. And then you take a look to the upside on this morning. You can see the Russell 2000 leading the charge, currently higher by about 0.8%. Meanwhile, you'll find a little bit more action if you take a look at Morgan Stanley right now. Sales and trading revenue beat estimates in the third quarter as assets under management topped $7.5 trillion. That's good for about a 4% gain as the markets open. We also want to keep an eye on Novavax. That's after the company said that the FDA has placed a clinical hold on its application for a COVID-flu combination and a standalone flu vaccine candidate as well. You can see shares a little bit of a wipeout of their own, currently off by almost 20%. Matt.
Wait, so can we not, because I don't want to get a flu shot and a COVID shot. Is there not like a single, can we
I
not?
believe that's what Novavax would like to give you, but having some issues getting that off the ground.
All right, let's, speaking of issues, let's take a look at shares of Intel. They are lower after Bloomberg sources said Qualcomm is going to wait until after the election to decide on a potential bid for the chip maker. Obviously, that's after earnings as well. Intel reports on Halloween night, I believe, after the bell. We're going to take a closer look at the chip sector. The Bloomberg's Abigail Doolittle. Abby, what do you see?
Well, let's kick it off with Intel, as you were just taking a look at, along with Qualcomm. And there has been some hope for this beleaguered chip maker. Once the gold standard, and then more recently, less exposure to AI and the U.S. manufacturing and other problems with some of their fab plans. In any case, down more than 60% on the year, so it's been buoyed recently, boosted, I should say, by the possibility of a takeover for Qualcomm. But as you just mentioned, Qualcomm is saying that there's uncertainty around the election. They want to see who's in the White House. Now, Palo has also said that they might help out Intel make a multi-billion-dollar bid. But today, investors looking past that. Yesterday's bad news has bled into today relative to the chip sector. And we're actually going to see over the last 5 days that the stocks overall down 2.9%. ASML holding down 16.4% over the last week. Yesterday, it was the worst week, I think, or worst day in 26 years. The company's been around for 28 years, basically pre-announced to the downside around sales. Today, the CEO coming out apologizing for the early earnings release and then saying that he thinks that the chip industry growth drivers are still intact. But it seems that the chips don't entirely believe it. And if we take a look at a chart of the stocks, the technicals, here we are going to see a pretty nice uptrend coming out of the October lows. And then over the last, basically this entire year, we've been in this massive range here for the shares, or excuse me, for the stocks. You can see this movement up. It looks like, Katie, that near-term uptrend is starting to break. If that happens, we could go right back down toward this level of support. A range is never interesting for the range. It's interesting for the way it breaks. That's a bearish range potentially. So let's keep an eye on the stocks and the chips. And of course, those beautiful tariffs you were talking about, if that happens back in, if the former president is elected, that could create further issues for the chips. That had been the poster boy for tariffs back before 2020.
All right, Abigail, thanks very much. Abigail Doolittle talking us through chip stocks. I actually took a deep dive into ASML.
Did you?
Yes, because I was thinking, what does ASML stand for?
Tell me.
It's Advanced Semiconductor Materials Lithography. It was a Dutch company, obviously, we all know that, but merged with, or did a joint venture with Philips back in 1984. So it's actually older than its IPO. Philips spun it off then in 95 and actually owns almost none of the business now.
And for our viewers, Matt doesn't even have Wikipedia open right now. This is just straight. You actually did your research here and you remembered it. It is pretty interesting. We never think about what these letters actually stand for. IBM, for example, International Business Machines.
Right.
Amazing.
Or what these companies do, right? They don't make
I can
chips.
tell you what ASML does. It It makes chip-making machines.
That's right.
And as we learned, NVIDIA is a chip designer. They're
That's
all
right.
very intricately linked together.
Because almost all the chips are made, I was reading through, I think, Hoover's history, and it said 90% of ASML's revenue comes from Asia. And I thought, wow, that's a lot. But of course, TSMC, right?
TSMC, which of course reports after the bell today. So this ASML story, it's not over, of course. It'll be interesting to see what that brings. But let's broaden out this conversation now. We'll do that with Anne Maletti. She is Allspring Global Head of Active Equity. And for all the talk of the broadening out in the rally that we've been discussing over the last several months, it was interesting that yesterday, of course, you had one bad report from ASML. It took down the entire sector, NVIDIA included. That took down the entire market. For better or worse, Anne, this is still a very concentrated market.
It is a very concentrated market. And look, we got there because the growth rates, both revenue and earnings growth rates, were better in technology than anywhere else in the market. That's what took us there. I think the fear is that we will start to see some deceleration of growth. We'll still get that growth, but it's going to be lower, likely going forward. The law of large numbers plays against technology at a certain point, or for at least some of the companies. And then there's some other challenges as well. And so it's forcing investors to look elsewhere, and elsewhere where fundamentals seem to be improving, and you have that earnings momentum starting to shift on the upward trajectory. Areas like healthcare, financials, utilities.
Well, Anne, you're head of active equity here. I'm curious how you invest around or with that big importance that tech has in this market. I mean, how are you treating it at this point, and how are you building a portfolio around it?
It's really interesting. It's a great question because as I talk to our portfolio managers across the board, they're believers that we're in a new innovation cycle that's going to be very long lasting. But it's not going to be as concentrated as the market is kind of pricing in today. You talked about chips a little bit earlier. Certainly, they have gotten huge multiples. We've also kind of forgotten in the short period of time that semiconductors tend to be cyclical. But that growth across innovation will extend beyond technology. It will certainly extend into software and other places in technology. We've just not seen that happen that much yet. And so our investment teams are thinking about where AI and where automation, where those things actually start to benefit the broader market, and looking for opportunities that are better priced, as well as, still not ignoring technology. It is clearly important.
So where are you finding? Where does AI benefit the broader market most?
It's interesting that because, healthcare is one area that definitely could use innovation, efficiency, and improvement, and AI could have huge benefits. Obviously, there's a lot of software that's used within healthcare, but med tech is a big part of healthcare as well. And I think we will start to see more benefits. Then you still have just the bottom or the basics starting to improve post-COVID, where you had lower utilization during COVID. We're starting to see some of that utilization improve, and some of the trends in healthcare services improve as well. So you kind of have the basics improving, but then you also still have the dream of innovation really helping change the healthcare system. So I would say that's one area.
It sounds so bullish, Anne, and we've been talking about the fact that this is the first week of the third year of the bull market, right? Saturday was the 2-year anniversary of the low on the S&P in 2022, and typically bull markets last 3 years. I think 80% of the time, 2-year bull markets turn into 3-year bull markets. On the other hand, households hold more equities as a portion of their financial holdings than they ever have since the Fed started keeping records in 1952. And we're trading at 22 times forward earnings. We've only seen that in, COVID and 1999. So what do you think? I mean, are you cautious here, or do you jump in with both feet?
Yeah, it's a great point, Matt. And I think, I was talking to a few of our portfolio managers earlier this week, just a couple of days ago, And, the theme is we're not paid to take big bets here. We're not going to be heroes in this kind of market. But what we're experts at is really trying to find those underlying companies that haven't been appreciated by the market as much as the ones that are trading, kind of at that average 22 times or higher. And so that's kind of why we've been looking down cap a little bit more in the mid and small cap space outside of just large cap. It's why we've been more focused on broadening out the exposure beyond technology. So we're not trying to say anyone needs to make a hero's call and say equities has got another, gosh knows how much upside, but there's still an ability to make money in markets if you're invested in the right areas.
All right. Ann, thanks so much for joining us. Allspring Global Head of Active Equity, Ann Maletti, talking to us about these markets. And, they feel like they're getting a little bit frothy here, even after yesterday's drop.
It sounds like you've been talking to Cole Smead. I know he trotted out that household stat at the beginning of the week. I feel like that's one of those stats where I'm not sure why that's supposed to make me a little bit nervous here.
Well, because everybody has all their eggs in the same basket, right?
Yeah, but it's a diversified basket, theoretically.
The problem is then if you get a downturn, like everybody's going to rush for the gate at the same time, right? And I've also been reading Nick Colas. The data trek notes are amazing.
Do you know why?
Why?
He went to Haverford. There's like 12 of us who went to Haverford.
He rides a Ducati as well.
That's pretty cool.
But
he's got something for both of us.
Jessica Robb writes for Data Trek as well. She had some fascinating stats on NVIDIA. So I would think that smaller companies are much more volatile than large companies. And she pointed out that 10 years ago, NVIDIA was only worth $10 billion. Now it's worth $3.4 trillion. And yet, the volatility of NVIDIA relative to the S&P is twice as much as it was a decade ago.
Also, the felt volatility of NVIDIA. You think about, again, the sway in the benchmarks. Even if you have this micro-cap biotech sort of company that's, going crazy, you're not going to feel that necessarily if you're one of those households that's so heavily
But you'll feel it if it's the biggest company in the MSCI All-World Index.
You certainly will.
Bigger than all but 2 countries.
Yeah, well, good thing. We're going to talk about chip stocks next.
Sweet. I'm down. Coming up, it's been a whirlwind week for chip stocks like ASML, which we all know everything about now. Its CEO holding an earnings call as we speak. We'll give you the details next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
our count.
Wilson's next. It was going to keep bringing World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
All right, let's turn back to semiconductors now. As we've been talking about, ASML yesterday reported early that weaker than expected sales, also rising concerns about the future of the sector. You saw that with the absolute wipeout we saw this hour. ASML, its CEO, said that AI, it continues to drive results, but other departments are recovering more slowly than expected. And then also in chip news, you had Qualcomm reporting showing that it will likely wait until after the election to decide whether or not to buy Intel. That is according to Bloomberg sources. Let's discuss all of it with Bloomberg Intelligence senior analyst Mandeep Singh. And Mandeep, Matt and I were just having a robust discussion about what these different types of chip companies actually do. And I feel like the public at large is learning that chip maker is a really unnuanced sort of phrase. So talk to us about ASML and how connected all these other companies are to it, such that we saw the wipeout that we did yesterday.
I mean, when everyone talks about TSMC and how dependent NVIDIA is on TSMC, well, guess what? TSMC is dependent on ASML to provide the machines for manufacturing.
It's a daisy chain.
It is. And look, I think in this case, the kind of the cutback in guidance was clearly demand related. The two factors were, one, Intel we know is not doing well. It is looking at its CapEx plans. They're probably paring back on their CapEx, the foundry expansion. Some of that is getting pushed out. And the other one is China related. We've been talking about, how China sales would impact NVIDIA and everyone in the semiconductor space. It did impact ASML. I mean, it was 30% in 2023. Next year, it's going to be probably 20%. So
it had been much lower than 20% in the preceding years. I just looked on the FA screen, and they were putting up like 11, 14, 16% in 19, 20, and 21.
Yeah, so clearly there was a pull forward because in China, I think there were customers who ordered in anticipation of the restrictions. But going forward, you will have more normalized China exposure, and there are more restrictions. So look, in the end, it comes down to how much these companies are investing in expanding supply. We know TSMC has more demand than they can, supply with the chips that they're making, especially at the leading node level. But other ones like Samsung, Intel, they haven't caught up to TSMC when it comes to the leading nodes, the 3 nanometer.
By the way, can I just ask about TSMC?
Yeah.
Aren't we getting those operations out of there? I mean, that's a pretty dangerous place to have most of the world's chip-making capacity, considering the heat with China, right?
Well, given the pullback in CapEx around spending on ASML machines, I guess it's not happening anytime soon. There is your answer. So, look, I still think it will happen over time, but near term, ASML's guide suggests 2025 will be more moderate than what everyone expected, and their estimates are going down.
Well, perhaps this brings us neatly to talking about Intel, because we know that U.S. government would certainly like to bring chip manufacturing back to the U.S. Intel is a big part of that, of course, has received billions of dollars from the CHIPS Act. In dire straits, Qualcomm, of course, Bloomberg reporting that Qualcomm, of course, may be going to wait until after the U.S. election and the inauguration to go forward with a potential bid there.
Yeah, look, there is a history with semi companies trying to buy each other. Broadcom wanted to buy Qualcomm. That never went through. Qualcomm wanted to buy NXP. That didn't go through. So a transaction of this size, which I expect would be at least, $150 billion if Qualcomm was to make a complete bid for Intel. You're not going to have regulatory approvals like this, and you want some certainty because there is a breakup fee element to it. And I think I'm not surprised they want to wait until November, at least to have some.
My prediction: they're going to wait forever. That's never going to happen.
Really?
Yeah, no way.
What do you think?
Why? It's totally different business, right?
Maybe parts of the business of Intel do make sense when it comes to Qualcomm looking to get into PCs. Not everything. I think nobody wants to get into the foundry side given how much investment you need to make. So clearly pieces of that do make sense for Qualcomm.
I think a lot of people who are, investors in Intel would really like it to happen. So
for sure.
We'll see,
At
of
a
course.
high valuation.
Yeah, what a rough ride, of course, for Intel, down another couple % right now. Mandeep Singh from Bloomberg Intelligence, thank you so much. You can follow the ASML call by typing T-Live Go on your Bloomberg terminals. Now, coming up, we'll head to Mexico City, where Bloomberg City Lab is in full swing. That's up next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
All right, welcome back to Bloomberg Open Interest. Take a look at stocks right now because we've turned decidedly for the S&P 500 down about 0.1%. But look at the NASDAQ 100 right now. Your big tech names currently lower. Of course, we know that it's been a rough ride for the chip sector. You have NVIDIA higher right now, but you have the likes of Apple, Microsoft, Qualcomm, Intel, etc. down right now. That is weighing on your big tech index. And once again, the small caps outperforming the benefits of a diversified portfolio. You have the Russell 2000 currently higher by about 0.8%, Matt. We'll see if it holds.
All right, it is day 2 of Bloomberg's City Lab Summit in Mexico City. Over 500 mayors and policymakers are gathering to discuss urban innovation, affordable housing, and probably most especially migration. Bloomberg's Carlos Rodriguez joins us now on the ground. Carlos, great to have you on the program. What are the most pressing issues? Yesterday we spoke with Ron Nirenberg, the mayor of San Antonio, and for him, obviously, immigration is front and center. I imagine that's the case for a lot of U.S. mayors.
That's true. It's especially important for the mayors closer to the border, right? But it's also fascinating to hear how some of these problems are shared even in other nations. We hear it from mayors from South America, from Europe, where they are also facing these type of problems, not only immigration, but also some historic challenges like irregular settlements, lack of efficient transportation. And also, they're discussing new problems that are arising with the advance of technology. For example, I know a few days ago in your program, you were discussing how Elon Musk is going to deliver on robot taxis. How are they going to shape the new downtowns of cities? Well, now the mayors are the other part of the equation, and they are also exchanging ideas on how to address this new reality of autonomous driving, of also of social networks. They have some concerns that there's so much mistrust in the governments, in the regulations. They are trying to get up to date in the digital age and address some of these concerns with better technology and more transparency.
And Carlos, we have just about a minute with you, and I'm curious to talk about housing. What is being discussed when it comes to housing, and what hurdles are these mayors facing when it comes to actually putting those ideas into action?
Yeah, the mayor of San Antonio discussed some of these so-called transit development hubs, where they are pushing to have the hubs of transit in the same place of new developments of housing and make space for affordable housing. And those ideas sound great. The problem is that they're facing in some of these cities, and we see it in many American cities, is that people say they're great as long as it's not in my backyard. So what they need to do is to have better communication with the local communities, and they're trying to do so. Also, we heard a little bit of the experts, the city planners, and their solution for many of these is stop worrying about some of the consequences or the byproducts of these developments. Start worrying about resistance from the community, and you should only be obsessed about creating a higher supply of housing.
Carlos, great having you on the program. Thanks so much for joining us. Bloomberg Carlos Rodriguez there at the Bloomberg City Lab Summit in Mexico City. Coming up in the next hour, we're going to talk to the CEO of Morgan Stanley. Ted Pick joins us live at 10:30 for an interview you don't want to miss. This is Bloomberg.
What's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology?
I had actually run tech banking and took Google Public, so I had a little sneak preview.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning. It is Alex Steele and Paul Sweeney, Bloomberg Intelligence radio program. We're broadcasting live from Wells Fargo Women in Leadership Summit at Kiawah Island, South Carolina. They've gathered prominent women in leadership to engage in meaningful conversations. We'll be having some of those good folks joining us over the next couple of hours. Markets kind of mixed here in the futures market. Coming up, we're going to check in with Danielle Squires, Managing Director and Head of Diverse Segments at Wells Fargo, and Maria Menendez. She's the Chief Financial Officer at GL Homes of Florida. Talk about the real estate business, generally speaking, with rates coming down, but also in Florida with all the really tough weather they've had to deal with. And then coming up, Suzanne Morrison, Head of Commercial Banking and Wealth Partnerships, and she's an Executive Vice President at Wells Fargo. And also Jessica Murphy, Managing Director of the Southeast Division, talking about banking relationships here in this fast-growing part of the country. So we'll get a sense of how Wells Fargo tackles that business. But right now, let's kick things off with Mr. John Tucker.
All right, Paul and Alex, this report being brought to you by Interactive Brokers Portfolio Analysts. Consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/freepa. The major averages mixed in the early going. Chip stocks recovering some from the previous session's rout, and Morgan Stanley's results beating estimates. That extends around of positive reports by the banks. We'll take a deeper dive in just a moment. A profit warning for the chip equipment maker ASML Holding. That rattled sentiment in yesterday's trading. The slide sent ripples across the industry. That actually resulted in more than $420 billion of market value loss for U.S. traded chip stocks. NVIDIA today, those shares are moving higher, up about 0.25% after sinking about 5% yesterday. And Qualcomm, which fell on reports it will likely postpone its offers to buy Intel until after the election. Well, the message is buy the dip in shares of ASML and other tech shares. That's from Rebecca Patterson, the former strategist at Bridgewater Associates.
I think for medium or longer term focused investors, it is a buying opportunity. We've got a structural trend underway in technology and AI, and ASML is obviously a critical part of that.
Right now, the S&P 500 4 points lower. The Dow Jones Industrial Average up 139 points. The NASDAQ 100 down 110 points. As for yields, the 2-year is down about 2 basis points, 392, and the 10-year yield right now is down about 3 basis points. That is right at 4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex miss you.
He misses us. I think, yeah, he does.
Yeah, exactly.
Alex Steele, Paul Sweeney, we are live right now from...
There we go. There we go.
Well,
okay.
Oh, yeah, we got it.
A little microphone problem down.
Yeah, we don't...
Sorry, we're good.
Well, we're good. We're good. We're here. We are live from Kiawah Island here in South Carolina at Wells Fargo's Women in Leadership Summit. We have a great lineup for you. We're very excited to be here. We are missing some stuff in the market, in particular, Morgan Stanley.
Yes.
Record high.
Fantastic.
Really hard to find anything wrong in this quarter. I don't think I've seen a Morgan Stanley stock move 7% on numbers.
No, and it's, again, we've seen it kind of across the board for most of these big global investment banks. The capital markets business coming through really strongly for a lot of these folks. They had a big September in terms of new issuance in the fixed income business. That's helping a lot of these folks.
Yep, all the banks kind of moving higher on that. So let's get more here with some of the movers with Norma Linda. She joins us back in New York in the studio. Walk us through more about Morgan Stanley.
Yeah, I mean, it's definitely one to dig into. This is the biggest percentage gainer, one of the biggest percentage gainers right now in the S&P 500. We're really seeing a broad-based beat here across the board. I mean, as you mentioned, we're seeing shares up as much as 7%. That's the best day this year and the highest level ever. This company is joining the rest of its rivals on Wall Street and posting some pretty great numbers. It reported better than expected revenue. It reported some great numbers in terms of its metrics in the wealth management unit, and a 32% profit jump for the third quarter. I mean, the company has risen nearly 30% this year. So if you're an investor that started at the beginning of the year, that's what your returns are looking like right now. But Evercore did point out that there is a clear momentum here at this company, and that improving market conditions and higher client asset levels will likely push estimates even higher.
Yeah, exactly. Even higher, which is really tremendous at the end of the day. And JB Hunt, so that's Morgan Stanley, that's the finance guys. Then you have JB Hunt doing really well, and that's like a real economy trucking story.
Yes, definitely one to keep an eye on. Here we're really seeing improving demand. It also reported a beat, and particularly when we're looking at profit, we're seeing shares up as much as 7.6% here, Alex. That's the most intraday since 2022. When we're looking on a broader scale, I mean, the stock is down about 8% this year, but this is some great news coming out of this logistics firm. Revenue fell less than expected. It did fall in many divisions, but the company said demand for its biggest segment, which is the intermodal service, did improve throughout the quarter, and that's supported not only by seasonality, but strong performance from its rail providers.
Intermodals, when they take the container ship, which the container ship was one of the greatest inventions of all time shipping, take the container ship off the big ship in Port of Newark, for example, load it on the back of a train. That train takes it somewhere in middle America. You take that container off the train, put it on a truck, and that truck takes it to the final destination.
It's almost like you used to work as a real.
I was on the investment banking team that took JBHT public back in the day.
Wow. Here we go.
And I took a truck ride from LA to Denver overnight.
Was that fun?
Yes. And they offered it to about 20 investment bankers. Only one raised their hand. That was me.
Amazing.
You're the special one.
Didn't you also have an office that overlooked like a railroad or something?
Yes, that was in Richmond, Virginia.
See, we learned so much here.
If it wasn't for Wheat First Securities, there would be no Wells Fargo investment bank.
Okay, so that's also an important point to know about Paul. Let's wrap it up here with Qualcomm. That stock down about 1.6%. What's the why here?
Okay, so the why here is that Qualcomm said that it's going to wait until after the U.S. election to decide on whether or not it wants to jump on that Intel deal that we've been discussing here. And this is according to people who did not want to be identified, of course, with talking about this confidential information. But we do know that Qualcomm has really been looking to China to see what they're thinking in terms of antitrust, and particularly here on the U.S. side with an election really approaching here shortly. They want to know whether or not the person who will be in power in November, or in January rather, after the inauguration day, whether or not they'll actually be cracking down on antitrust and whether or not this makes sense for them to move forward. And of course, we do know this will be after Intel reports their results, so there could be some strategy there here for us, Alex.
All right, Norma Linda, thank you so much. We appreciate that. Norma Linda giving us a breakdown of what's happening in these markets. Kind of got some mixed tape out there. I think we're going to digest a lot of these earnings, but certainly the Morgan Stanley earning wraps up what has been a really good, kind of bulge bracket start to the season here. I'm going to be interested to see how the European banks come in next week, because it's just the difference between the U.S. big banks and the Europeans is just getting bigger and bigger.
Well, and also regionals too. Like that's where you're going to see when you really see loan demand kind of kick back up.
All right, we are broadcasting live from the Wells Fargo Women in Leadership Summit in Kiawah Island, South Carolina. They know me well down here. I'm just saying.
Oh yeah?
I've been here once or twice.
Is that why yesterday went so well for us when we traveled?
Yes, exactly. Gosh, what happened? See, that's what happens when you don't fly private.
Bummer.
Yes, exactly.
Paul's private was not working. All right.
Danielle Squires joins us, Managing Director and Head of Diverse Segments at Wells Fargo, and Maria Menendez, a Chief Financial Officer at GL Homes of Florida, down in Sunrise. Thanks for having us here. We appreciate it. Danielle, talk to us about what you guys are trying to accomplish here at this conference. I see, a couple of conference rooms full of people. You guys are engaged in some big conversation. What are you trying to accomplish here at your conference here in Kiawah?
Awesome. Well, first I'd say, Paul and Alex, thank you so much for joining us here and for having Maria and I on this show this morning. And two quick things, Paul, just from what you said before. One, I'd like you to know that I would also take the journey in that truck. I think that sounds really awesome. And two, I know First Union Wheat First very well, having been with the company for 25 years.
Exactly.
So, but with that, it's just such a wonderful event here. Our Women in Leadership Summit is really a chance for all these women here today that come from various industries across the financial and the economic and the business space to really connect, to learn, and to grow, right? Come here, get great content, make connections that they otherwise wouldn't make with each other, meet people in different spaces and circles, and really go out and come back to their companies, come back to their communities and say, this is what we can all do together. So promote them as leaders, and then also have Wells Fargo play their part in making that happen.
So Maria, what have you gotten out of it so far? What are you looking forward to get out of it?
Well, I've really enjoyed meeting people outside of the industry. We have that circle of home building is very tight. So I've met people in other aspects of real estate as well as other functional departments and areas that are not just in the finance area. So that's been great. And I'm just looking forward to the next couple of days and getting to meet everybody else that I didn't get to meet at last night's great dinner. It was lovely. Great weather.
Yeah, exactly. Beautiful down here, folks. And if you haven't been to Kiowa, it is. And if you kind of like the game of golf, it's fun. But it's the low country down here. Love it. This whole South Carolina, kind of North Georgia, it's awesome. There's unlike any place else.
There are deer here.
Everywhere.
Deer, deer, like
and there
roaming
are
property.
Humongous bugs here. I'm just saying. I may have seen a few of them this morning in the hotel room. Maria, talk to us about your business. Talk to us about the home building business. We hear so much about a housing shortage and housing affordability problem in this country. I'm not sure necessarily how we got here, but boy, we're here. How do you guys think about your business? Tell us about your business.
Well, you could debate how many million, but the truth is there is a housing shortage, whether it's 2 million or 4 million. We are a very niche builder. Okay. We build only in Florida. We've just been through Hurricane Helene and Hurricane Milton, and we've come through it beautifully. Unlike what you see in the news, new construction away from, the coastal areas is very different when you're 10, 15 miles in. And the home building industry, like Wells Fargo has been with us through when we were a couple $100 million company to being a $2 billion company. So home building has gone through, periods of normal growth. We survived the Great Recession and the frenzy that it was the pandemic and post-pandemic. And now we're hitting kind of a normalization period again. Interest rates have finally the Fed has made the first cut. Of course, that cut impacted Fed funds rate. It's not the 30-year mortgage rates because people keep on making that connection. And of course, that runs off the 10-year treasury because that's kind of the normal life of somebody in a home. But what it did do is psychologically, it set the stage. Interest rates are coming down. Mm-hmm. We don't know the pace or how quickly if those are going to be 25 basis point 50. But what it does do for the home building industry is it says at some point that spread between the 10-year treasury and the 30-year mortgage rate should normalize from instead of being a 1.5% to 2%, now that it's almost 2.7, 2.9. So as demand comes down, the certainty around rates comes down. We'll see interest rates come down on the mortgage rates. Mm-hmm. And I think that'll be a period where we'll be able to see affordability come back a little bit. And it'll also take those people that are in that 3% golden handcuffs kind of mortgage and let them start thinking about, okay, maybe if rates are 5.25, 5.5, 5.75, I finally start making that move. Right. And they put more houses into the market.
So talk to us a little bit, Danielle, about the relationship that you guys may have. Taking a company from, $200 million to $2 billion. Like, what does that relationship look like? How do you support it? How do you have, the faith that it's going to work in that relationship?
Oh, I just appreciate that question so much. First of all, working with GL Homes and somebody like Maria, it's easy to have the faith because in addition to faith, you've seen the execution, you've seen the impact that they can have, and it's a fabulous business. I think also if we take a little step back, think about just what the role of women in business today. It has certainly grown. It continues to grow. It is our future. And I think some of what we look at is if you looked at between 2019 and 2023, women-owned businesses were growing at more than double of other businesses that were starting. And that number has just continued to grow and to expand over time.
Why is that? Why do you think that happened?
Well, I think the power of the purse is changing. And I think it's one of those things where we take a look at and say, these are amazing people who are now in the right spaces, in the right places with the right support, right? Talent and prowess and ingenuity were never lacking. It was opportunity. And so now that there is a focus on opportunity, there is a focus on how we as a firm and many financial firms can support these businesses in growth from the first inkling of an idea, right, in our small business space, in our ingenuity in our accelerator programs, all the way through how we work with them in our commercial real estate. We are fortunate at Wells Fargo to be the #1 platform in commercial real estate. And as such, we have the ability to look in each and every one of our markets and say, where can we do more? more? Where can we better? How can we push the system, and how can we be responsible around that? Maria and her company are just a gem of the companies that we work with. Looking at being value add, having the right people, seeing trends, I think it's constant communication with the team.
I think what's one of the things that Wells Fargo's done really well is we are a family-owned business, so they know not only the finance team but the ownership. They know our COO, who's a woman. They know our chief marketing officer is a woman. They make it a point to go out to our communities and meet the people that are actually excavating lakes and doing the construction and viewing the product and viewing our clubhouses. So it's a very collaborative kind of growth. So they've seen our growth, and they have been really into our culture as well as our business model, which is very different from a large national home builder. So that kind of collaboration is what made it. It's great for 2.5 decades.
2.5 decades. Interesting. Danielle's a Duke grad, so that's another reason we like her. But that's it. I think for the rest of the day, they're Carolina people coming through.
Oh, I'm so happy you said that.
There are
Thank
too
you.
many Carolina people at Wells Fargo. I get the whole Carolina thing.
It's tough stuff, guys.
Maria,
Sorry.
the real estate business is tough enough. Florida? I mean, every time I turn on the news, you guys are rebuilding. And how do you deal with that risk day to day?
Well, one of the things, I mean, Florida's had tremendous growth.
Yeah.
You know, during the pandemic, we've had so many people come into Florida. But the fact is, new communities aren't really like our communities that are single-family home communities, a couple hundred acres. They are not built on the coast.
Yep.
So you're 10 to 15 miles inland. Some storm surge isn't an issue. On top of that, you know, finished floors are 8 to 12 feet. In Tampa, they're 60 feet above sea level.
Okay.
So flooding is not an issue. Then you've got concrete block construction, the latest Florida kind of building code. It's impact glass and tremendous amount of focus around water intrusion. So my heart goes out to everybody impacted by Helene and by Milton and, you know, the devastation. It's super scary, and the preparations are important. But what you see in the news of the coast and older construction, it really shows that where you live and how the home built is a difference. And I think what we'll see in home building is people moving to new construction because of that.
Well, we're going to continue the conversation with Danielle Squires, managing director at Wells Fargo. She's also head of diverse segments at Wells Fargo. And Maria Menendez, chief financial officer at GL Homes of Florida. We will continue that conversation. Plus, coming up, we're going to dip into the Morgan Stanley CEO Ted Pick interview, speaking with Shonali Bassick. You have the stock rallying the most since November 2020, sitting at a record high after fantastic earnings. We'll bring that interview to you. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. With this Bloomberg Business Flash, the S&P 500 right now 7 points higher in early trading. This is a day after sliding from its all-time high because of tumbling energy and technology stocks. Morgan Stanley right now posting better than expected revenue, profits surging 32% for the third quarter. The wealth management group there had $7.27 billion of revenue, and Morgan Stanley shares, they are up close to 7%. J.B. Hunt Transport Services up by 5% after the freight company delivered better than expected earnings results. Well, technology stocks, they are holding up better a day after that warning from ASML, the supplier to the chip industry. Shares of NVIDIA after yesterday's sell-off, they're up 1.5%. On the data front, the next piece for investors to watch out for, retail sales. We're going to get that tomorrow. Right now, the S&P 500, again, 9 points higher. That's up about 0.2%. We're at 58.24 in the index. The Dow Jones Industrial Average up 147 points. And the NASDAQ 100 is lower, down 21 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and it's your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. We are live from Kiowa Island right here in South Carolina. We're at the Wells Fargo Women in Leadership Summit, where they try and bring together women leaders to engage in some meaningful conversation. And we're going to pick up our meaningful conversation right now with Danielle Squires, Head of Diverse Segments, Wells Fargo CIB, and Maria Menendez, CFO at GL Homes. Danielle, I wanted to talk to you more about how the relationship that you may have with women business owners changes as the business grows, right? So Maria was talking about how they went from a couple $100 million business to a $2 billion business. What does that mean that they ask of you that's different?
So, we're really fortunate as a company to have such talented people who work with all types of companies, different shapes, sizes, and industries. And so we have actually a platform where we have a head of diverse segments, both for our consumer and small business banking, for our commercial business banking, for our home lending businesses. So think of the mortgages that we do, for our wealth and investment management platform, as well as corporate and investment banking. And really what we want to see, folks, is sort of their ability to travel and swim throughout all of the offerings that we have at Wells Fargo, and wherever their need is, we can meet them. So if we have a client who's looking for their first credit line ever, right, we can work with the Small Business Administration. Well, I love to say that small businesses become big, great businesses. And so the needs are different at that point in time, right? The facility sizes get larger, the way in which they issue debt might get larger. And then imagine the founder of a company after 6, 7, 10 years has the ability to IPO. What I really love is that, one, we can meet all those needs, 2, we can advise along the way, and 3, to watch generational wealth grow. That has to be one of the most rewarding things, to see, especially women in business, as they learn, as they grow, as they execute and achieve. It's actually an honor to be part of that, and I think we can along the way.
Yeah, that's
right. Maria, at your company, GL Homes here, can you talk about, the growth you guys must be dealing with. We think about South Carolina, Georgia, Florida, Texas being these great growth markets, which they've always been, quite frankly. For the 40 years I've been in investment banking business, that's where the growth has been. Then comes the pandemic, and then it takes to another level.
Yeah, it explodes.
Talk to us about the last 4 to 5 years for you guys. How has your business changed? How has your planning changed? How has maybe your banking needs changed?
Our business has changed dramatically. We went through some really difficult times. Getting a house built during the pandemic took 6 to 12 months before, and it could go from 9 to 18 months. And now we're seeing it kind of come back to normal. Supply chain issues have kind of normalized. But during that time, it was kind of all hands on deck. We reached out to, like, Wells Fargo when the market was struggling in Florida. You're building $1 million homes. Yep. So we reached out to Wells Fargo and said we need help on the mortgage side of the equation, particularly for jumbo loans. So we reached out to all of our contacts. We actually grew our facility from being, we were in bilateral agreements. We have now a corporate facility, and Wells Fargo helped us with that. It grew $300 million during the pandemic.
Wow.
And it's just, a very different business. Also, demand is really different.
Yeah.
And trends changed a lot. We went through a period of time kind of pre-pandemic that everybody wanted a media room, designated spaces. During the pandemic, they was like, I need flex space. I need to use it for yoga one day. I need to use it for an office for a different day. People were home more. Laundry rooms got bigger. Kitchens got bigger. And now they're kind of coming back to like maybe even formal dining is coming back a little bit. So the product changed a great deal and what people wanted in the communities. The pools had to be bigger. The dining had to be bigger. The outdoor event, sports. We went, one community has 37 pickleball courts.
Oh my gosh.
Yeah, and they're building 15 more, and Padel's coming on. So the activities that had to be provided are completely different. So it's about knowing your customer and what they want.
So when you have to grow that fast, Maria, what's the biggest struggle in growing that fast and having to pivot that quickly?
It's getting people trained and inculcated in your culture. We're a very detailed-oriented company, privately held. One of the great things about Wells Fargo, Danielle talked about an IPO. If you also say, I want to own this in my family for next 10 generations, okay, we're there for that, and let us help you with that. So it's really getting people trained. There's such a shortage of plumbers and electricians, and getting out to people, getting the trades kind of up and going and getting the training done. Those would be really great women-owned businesses. I'd love to see more women owning them because they're kind of detail-oriented to scheduling, the details of what the work needs to, like reaching out to the customers afterwards. So it's just getting all the trades up, people internally trained to do higher volume, because you went from maybe you had to start 4 houses a week to having to start 12 a week to meet demand. So it's just the ramping up is just an immense effort.
Danielle, I've been in the financial services career all my life, and diversity has always been, I would say, a challenge on global Wall Street. What happens I've seen in managing businesses, the incoming analyst class, the incoming associate class is diverse. Every box is ticked. Yeah. Every box is ticked. Every year at every firm. 7 years, 8 years later, when it comes to the managing director or partnership discussion, it ain't so diverse anymore. What happens?
It's interesting because they used to talk about sort of the off-ramps and on-ramps that people see, both because of what's in their lives and potentially as people grow, and the opportunities that are afforded to them. And I can say what I'm really proud of at Wells Fargo is that we actually focus very well, very specifically in on that. How do we keep people excited, energized, and growing? And it's equally as important to how do we keep you doing exactly what you want to be doing and what you're good at doing? And sometimes that means moving within. So some of the programs that we have from a DE&I perspective are some of our sponsorship programs, some of our our building organizational leadership diversity, our BOLD program, which really takes different leaders across all of our bank and puts them in a development program, and something that we've been running the last few years with a great success from a promotion perspective. But what I've also say, I'm really proud that we've also been successful in a lot of ways. And so if you look at, we were talking about our real estate business, again, being number one. Kara McShane is a phenomenal woman, also a Duke grad, to throw it out there, who actually runs that business, right? And so that's a powerful platform. Our co-head of equities, who is moderating a panel with our women in leadership today at Wells Fargo, Judith Berry. We have the co-head of our equity capital markets is Jill Ford. 51% of our employees are women. Our board is made up of 30% of our board of directors are women, 27% of our operating committee. These are the people who report directly to our CEO, and then 41% of all executives at Wells Fargo are women. So, Paul, I'm happy to say that trend is moving in exactly the right direction.
To then Mary, but both of you guys, when it comes to diversity, how do you, on Wells Fargo, how do you help housing affordability? So Danielle, I'll start with you, and then Maria, I'd love to get your thoughts on that.
So housing affordability is obviously a great one concern of ours and a great focus of ours, especially in our foundation.
That's really how you build wealth. Like, that's a really
huge
helpful way to do that.
It's the single largest component.
And it's something we focus on both from the foundation perspective, and we do it actually in the whole ecosystem. So both for people to afford it, right? The ability to understand what a credit score is, the ability to understand how we grow the credit score, to the ability to understand the mortgage process. So that's all at one stage. What we've also done is actually work with diverse housing developers, right? So how do we get more diversity in the housing development space? How do we get more diversity in the housing appraisal space? So think of a giant circle in an ecosystem. We actually have to attack every single piece of it, right? How do we support the consumers as they grow for the wealth? How do we help build more affordable housing? We have an amazing, Vanessa Rodriguez is a woman who runs our affordable housing and community lending and investment. How do we get more money into the cities, into the states where affordable housing needs to be built? How do we get the hands and loans and financing into those of the diverse developers? And then how do we have summits like this that connect people? Because what we can do is a lot, but what we can all do together is far greater, and that's the real answer. And so how do we get everybody together? Affordable housing is something we're actually one of the leading lenders on, and that's something we're going to continue to focus on.
Yeah. When you think of affordability, it comes with a lot of different shades. There's workforce housing, there's affordable housing, and there's market housing that's on the lower scale and affordable to people that are a nurse and a firefighter. And that's about having to design product that we can actually build at the right cost. So that might mean that flex space becomes very important to them. The design might have a little less few windows than, you know, the 4,000 square foot house someplace else. So coming to design product that works at a price point, because we all can't be in affordable housing or workforce housing. There's market rate pricing that can be available at a price point. So that means that there's going to be more duplexes and villas, and the whole world kind of needs to get a adjustment around density, because that is one of the biggest issues that we have today. We can build more affordable housing and things that people can afford, but we need a little bit more density, and with the price of land and how hard it is to get entitled, we really have to work toward that to find the right mix and then put the right product on it.
All right, guys, thank you very much for joining us. Really appreciate getting some of your time. Danielle Squires, Managing Director, Head of Diverse Segments at Wells Fargo.
Thank you.
And Maria Menendez, Chief Financial Officer at GL Homes of Florida Holding Corporation, Sunrise, Florida. So good conversation on real estate, affordable housing, banking, diversity, all kind of intertwining in there as well. So in-depth conversation. Good stuff there.
Yeah, really good stuff. Morgan Stanley stock, talking about good stuff, is up by 7%. That's the biggest rally they've seen since 2020. Also sitting right on a record high. It had a windfall from trading as well as banking. That was a big one. 32% profit surge for the third quarter. Revenue from trading was up 13%. We are going to take you now to Ted Pick, Morgan Stanley's CEO. He's speaking with Bloomberg TV anchor Sonali Basak, who is giving that interview. We'll join that interview that's under progress. He has said that we've seen share gains in trading over the last year, and fixed income leaders are running away from the pack.
Yeah, good stuff. All right, let's listen in. We have Morgan Stanley CEO Ted Pick speaking with Bloomberg TV anchor Sonali Basak.
But I do take your point that it is very important for us to continue to pay attention to where there may be leverage in the system. Now, leverage is more expensive given we have higher rates. And the reality is we're all looking to do the right combination of high margin business with clients, which means that you have to be thinking about clients durably over decades. Which clients are going to be in the businesses you care? Where might we be working with a client across our firm to manage those assets, source assets, structure, finance. So it's not just the classic investment banking play, it's also their interaction with us in the wealth management context, their interaction with us in the investment management context. And you've heard Sonali and me talk about the integrated firm. That's where we think it's powerful, not just because there's interconnectivity, but there's also sort of an ongoing diligence around who we're interacting with, at what level, how do they think about their strategy and culture.
Now, I also want to move away from trading and over to M&A and IPOs, because this morning you told analysts that you are bullish. When do M&A, big deals, and IPOs in large form come back, and how large will they be when they do?
I think you hit on it. They're going to be larger. They're going to be larger because it is a process to go public under Starbucks, and for smaller companies that may be orphaned without the proper research. If they have a great growth story, why can't they go public? We're going to continue to be the underwriter to exciting young companies that only have a small number of years of operating experience and get through the entire 33 and 34 Act process of going public and grow, and then eventually either become acquiring vehicles or they themselves get bought out. That will continue. But what is more likely, as you know, and you spend a lot of time talking about, there is $1.3 trillion of dry powder held by financial sponsors. There is at least $3 trillion in the ground, 10,000 portfolio companies, and for the first time in almost 15 years, the rate of deployment is outpacing the rate of raising. So why is that important? As we both know, because that equation means those private equity sponsors need to monetize. How are they going to monetize? They could sell to other sponsors, they could try to find a deal with a strategic, or they could go public. So I think the beauty of going public as larger companies is coming back, but I also think it's going to be a global phenomenon. I think you see equitization rates really starting to increase in places like Japan that have been so quiet for the better part of 35 years, where we have a leading business. On the continent, places like Italy, you'll see it in the Middle East. So it's a global business, probably smaller unit size, but larger companies that need the full suite of our products.
You know, we hear over and over at Bloomberg that people are waiting till the election. They're waiting till the election. And a lot of investors are guiding to volatility headed around the elections. How are you preparing for that? And how are you hearing from clients on how choppy things can get?
We stay close to clients, as you would expect, because it's a coin flip on any of the red, blue, red combinations. They're nimble and staying pretty liquid around what might happen. The reality, though, is not only do we not know what the combination is going to be, we don't know what the policy reaction function is actually going to be off of what has been said. And for that reason, I think you have a number of investors that are actually just sort of continuing to plow forward on the view that the economy is in pretty good shape. And that consumers and corporates are in great shape, so that when there is an election outcome, once there's a sense for whether new policy will actually get affected, then they can have a reaction, and obviously that also then brings into question what monetary policy will look like. I think that our job is just to stay close to clients and to make sure our infrastructure is fit for purpose. So we do run tabletops to make sure that not just that we can help offer solutions to clients, Shanali, but also that we have our act together internally.
Even after the election, is there a sense of which party at this juncture is better for the stock market? Do you have a view?
No, I don't. I really don't, because I don't know that we can imagine what the combinations will be, what the mandate will be, and what the policy action will actually be coming off of what's been said during the campaigns. What I do know is that the economy continues to be in pretty good shape, and that gives any new administration some tailwinds, but of course they need to also continue to imagine where we are in the election cycle, and they also have to pay attention to deficits and national debt and all the things you've been talking about.
You know, there's the election itself, the vote, and then there's the moment till the vote is certified. Do you expect uncertainty to clear up quickly, or do you think it will last for a while? I know what I'm hoping for is what we all hope for, which is that the election is a certain outcome, and then we just go about getting a sense for what policy is. If there's uncertainty, that could go on for a bit of time, but markets tend to be reasonably sanguine about that kind of uncertainty. For a number of days, there could be some jittery behavior, but assuming we know where we're going, the markets should align in due course. You know, another uncertainty is capital rules around the big banks. The U.S. is mulling revised capital rules with lower capital requirements than initially put forward. How do you feel about the direction of travel? I feel like the direction of travel has been constructive. We are carrying a capital buffer, as you know, about 160 basis points. We continue to carry that kind of buffer because it's an uncertainty that affects Morgan Stanley. And, you know, if I think about the three pillars of things that I care about, Shanali, at this place, I care about a strategy, which is to raise, manage, and allocate capital for individuals and institutions. I care about our culture, which is one of rigor and humility and partnership. And I care about financial strength, capital, liquidity. So whatever the we'll call it vicissitudes of the discussion going into the election, I think it's
it's probably the case that we're not going to have resolution on this until after the election, but I think the industry has made its case on where some real modifications should be made, and I think the regulator is largely listening, and we'll have to see how that plays out coming out of the election.
Ted, do you think if Trump were to win the election that these capital rules are revised almost entirely?
No way of knowing. No way of knowing, because I think in fairness, there is a desire to put the puck on the ice, and it may be in everyone's interest, whatever the administrative combination, to get something done. And if the industry feels it's reasonable and it's reasonable for Main Street and for our client base, there will be an effort to go forth. On the other hand, if it continues to be a tough one, we're going to have to continue to talk.
All right, that was Bloomberg Television anchor Sonali Basak speaking with Morgan Stanley CEO Ted Pick. Good, solid quarter coming out of Morgan Stanley here this morning. The stock's up 7.2%. The stock's up 29% year to date. It's got a market cap of $195 billion. So just extraordinary performance there out of Morgan Stanley. Pretty typical of what we've seen from some of the other large investment banks as they take advantage of a very positive capital markets business. We are broadcasting, Alex Steele and myself, we are broadcasting live from the Wells Fargo Women in Leadership Summit at Kiawah Island in South Carolina, where they've gathered prominent women in leadership to engage in meaningful conversation. And we are fortunate to have two more of those guests here joining the stage with us here this morning. Suzanne Morrison, Head of Commercial Banking and Wealth Partnerships and Executive VP at Wells Fargo. Jessica Murphy, Managing Director for the Southeast Division, Executive Commercial Banking at Wells Fargo. Commercial banking, to me, when I think of Wells Fargo, I think of the strength of the commercial and the corporate bank. I kind of envision you guys talking to everybody from big multi-international corporates all the way down to the small business here. So let's just start with you, Jessica. Just give me a sense of, I could be a successful banker down here in the Southeast. I mean, come on, this market is growing like crazy. It has for 30 or 40 years. Talk to us about the market today when we've had this influx of people, even more than the usual, post-pandemic. We've got rates coming down. How is business?
Yeah, so I've been in my role just over 6 months now, and when I had the opportunity to move into the Southeast, I've thought about it exactly like you just outlined, Paul. How can you not get excited about the demographics, the economic trajectory of the Southeast? Of the 8 states that I'm responsible, every one except one is growing above the national GDP level. The employment statistics are fantastic, and the business environment is very productive. We have a lot of swing states here. We just got out of a real-time political panel, a very dynamic and vibrant part of the economy. And then to where you started with Wells Fargo Commercial Bank, it is an critical and thriving part of our franchise. We intersect businesses about 25 million in sales or revenue, all the way up to 2 to 5 billion. So one of the most exciting parts of the U.S. economy, and something we do very well at Wells Fargo.
What's the biggest question that they have? Like, they call you up and be like, look, I need you to answer this.
So
Suzanne's actually like and nodding. So clearly you want to get into that too.
Well, I'll tell you, I think our clients have just a massive range. Paul, you said it. We're working with companies between 25 million and multiple billion. Mm-hmm. They're mostly privately owned. We have an election coming up. We have potential, changing economic landscapes. And so really they come to us and we just try to listen to what are they trying to achieve to grow the business and think about their family dynamics, and then try to match off no matter what the scenario is. But uncertainty is hard for businesses to think about those decisions, and I think we're always trying to be really dynamic with them on how do we help them navigate that, and I think it's top of mind for a lot of business owners.
And one of the things that I've noticed just in my career is when you get these privately owned companies, and they've created a lot of asset, a lot of wealth, mm-hmm. and then they have a liquidity event, whether they sell the company or sell a portion of the company, then they don't know what to do with the money. How do you guys, that's a wealth management discussion. And
that's where we go to you, right,
yeah,
Suzanne?
Is that where we go to you?
That's why you straddle both areas.
We do, and we work really closely together in this way at Wells Fargo. And we think about clients on a life cycle. So they have a personal life cycle as they're building that business and the value, and their business life cycle. And we're really focused on how do they stay ready no matter what they want to do, right? So they're preparing if it's a generational change in generational ownership and leadership change, or preparing for the liquidity event. So hopefully we're having really good conversations, Paul, before they get to that event, so that they can really lay the groundwork of all the planning, philanthropic, trust and estate type of dynamics that they need to think about to maximize that value for their family. So it's a whole range of decisions that they make on those events and what they do, depending on their values and priorities.
And that's obviously the longer term. In the short term, Jessica, we're talking about that uncertainty, right? And the two that's going to affect small businesses are going to be tariffs and taxes. So when they call you up and they're like, I don't know what to do, how do I understand where I should be investing my money in the next 12 months? What do you say to them?
Well, I think Suzanne answered it really well. It's very specific to what are the capital needs you have near term. What are you trying to do with this business? Are you just trying to survive because you've been very impacted by, say, a hurricane or something? Or are you thinking strategically for the future and trying to scale at a rapid rate? And the advice will be different. But you touched on taxes, you touched on the election, but certainly economics is highly relevant, and rates has been the theme. So most of our clients were surprised, even though I think the Fed was very clear with rates rising as fast as they did and now turned around. We've had a 50 basis point cut. Our clients are wondering, is that going to continue, and how do we take advantage? And at Wells Fargo, we're not really in the business of predicting. We have a few people in our business that are traders, et cetera, and they try to anticipate that. But what Suzanne and I do is help people be prepared regardless. So no matter what the policy is, we want to make sure your business is successful throughout those cycles.
When I think Wells Fargo, I think North Carolina, I think Charlotte. But I also think of now our good friends in the western part of the state. Devastation, devastation. I mean, people moved there from all over the country because there weren't earthquakes, there weren't forest fires.
It was a climate haven.
It was a climate haven, and then they got just crushed. How did your bank respond to that? Because again, when I think of North Carolina, I think of Wells Fargo.
Well, I think there's probably two ways. I'll start with just the charitable and outpouring of time and resources into the region. We have, like you said, deep connectivity. We have bankers in that community. We have people that represent it. And then we also have many people that spend vacation and other family time there. So Wells Fargo Foundation donated over $1 million almost immediately. We have a We Care Foundation where employees that were directly impacted can receive resources to combat like just the personal devastation that they've reacted to. Our ATMs have a, safe and secure and no service fees donation to the Red Cross. And so I think that's, expected and immediate and appreciated. But at a business level, one of the first things that happens when you have a natural disaster is you lose power, you don't have your cell service, and you immediately move to a cash economy. And so we had a very important role in getting our own branches and employees there safe and up and running so that we could support the economy. We had to get cash in to have people make payroll and meet their basic needs. But then we also have clients that are convenience stores, grocery stores, and they need a safe place to move their cash so that they can get it back into the system and account for things. So we play a really critical role in that in the communities that were impacted, both in West Florida and the western part of North Carolina.
How long do you think it's going to take for everything to sort itself out?
Well, I'm told most of Tampa will have power by Thursday. I am not an expert. And then on the western part of the state, I mean, this is a massive rebuild. The destruction of the infrastructure, of the water system. I'm not an expert here, but what I will say is there's a meaningful role for banks to play in the rebuild and to rebuild in a more resilient way.
Yeah. All right. Well, we're going to continue this conversation just right after this break. We're going to be speaking with Suzanne Morrison, Head of Commercial Banking and Wealth Partnerships and Executive Vice President at Wells Fargo, and Jessica Murphy, Managing Director, Southeast Division, Executive Commercial Banking at Wells Fargo.
Hey, since we're talking Wells Fargo, let's talk about the stock. That's what I do.
Okay.
The stock is up 1% today. It's at a 52-week high. It's up 29% year to date. So the banks are making money. I mean, we're seeing it across the board, and it'll be interesting to see how they perform with interest rates coming down gradually, and the net interest margin seeing some pressure. But I think what we've seen so far this quarter is a lot of these banks, kind of overcompensated or making up for that with their capital markets business.
Oh, yeah, in a big way. My question still is, like, when's the loan churn going to happen? And you have to wonder, after we get past the election and there's more clarity maybe on corporate taxes, does that sort of unleash more investment
and we still haven't
from
seen
companies as well?
Commercial real estate, the office stuff, that hasn't come in to bite us yet.
No, but there's like it's like this
I know,
much. It's like a teeny bit now is what we keep hearing. All right, we're going to cover all of this coming up. We are here from South Carolina. This is Bloomberg. Happy Wednesday.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Wells Fargo Women in Leadership Summit at Kiawah Island in South Carolina. They're gathering a lot of business leaders, prominent women in leadership, to talk and engage in meaningful conversation on how to grow their business. And we're joined right now by Suzanne Morrison, Managing Director of Wells Fargo, and Jessica Murphy, Managing Director also at Wells Fargo. Suzanne, you really straddle that commercial and wealth business. How do you talk to clients about how to build up their business and then monetize that wealth at the same time?
Yeah, I think it's a fantastic conversation. So most of our clients are private or privately controlled public companies. Half of their mindset is absolutely focused on growing the business, and half of their mindset is thinking about growing that business and the value for a legacy for some reason, generational transition or otherwise. And I think we just, our teams deliver in an excellent fashion. So when it's business growth, we're talking about growing through acquisitions or growing organically or all of the things we'd naturally talk about with our executive teams. And then what we're translating that back into for their business is preparing for that event, right? And so what do you want to do with this great business that you have built? And we have teams oriented just around that conversation. So we're indifferent if it's an exit or a generational change. We just want them to be ready, and it matches against what their personal objectives and values are to do it. And so we deliver that through great teams on our commercial bank and our great teams in the wealth platform as well.
Jessica, when I banked the Southeast way back in the day at Wheat First Securities, again, the source of your broker-dealer license, thank you, you're welcome. We banked trucking companies, furniture companies, broadcasting companies. I think it's probably changed a lot since then. Talk to us about kind of the companies, the areas of opportunity that you guys see in the Southeast.
Well, it's changed and it hasn't. I mean, those companies are still the backbone of the economy here, but what we have seen is our industry expertise in the tech sector, in healthcare, in some of our kind of other verticals have been exploding. And what we've done is try to pull all those threads together to support the economy, but certainly women-led businesses. Obviously, this would be an example of an event like that. In 2023, women started created $2.7 trillion in revenue from businesses that they lead. So
awesome.
That's not just in the Southeast, though. But we recently, I'll just highlight a cool event. We sponsored a film called Show Her the Money, and it shines light on the fact that female entrepreneurs receive significantly less venture capital than their male counterparts, despite their very successful track record and, according to a BCG study, better return on investment. And so we show the film in a community. We were in Raleigh, and we had centers of influence, clients, and other important leaders in the community talk about how to address that, not just because it's a good idea, but because it's a great investment.
Right, exactly. It's not just like support it because it's nice, do it because it makes money, and we're going to put that out there. Suzanne, are you talking to businesses right now in terms of their long-term trajectory? I know it's a curated process, but is it more private for longer? Is it conversation IPO? How has that type of conversation changed?
Yeah, and I think over the last decade, the evolution of private equity and private capital has changed the landscape on alternatives for private business owners. But I also think even in the last 5 years, if someone wants to stay private for longer, partnerships between family offices and investors that might have a longer time horizon, the landscape has changed for alternatives, for exits, or continuation of involvement in a minority fashion. So I think what we have tried to do is continue to adapt, again, being very indifferent to how they want to exit, but making sure that they know their alternatives. And I think the size of the company, the industry that they're in, we try to just deliver it into that conversation. There's absolutely continues to be a lot of great strategic activity, too. And so somebody's best client may be their best acquirer down the road. And so I think the opportunities just continue to open up for private business owners in that conversation.
Maybe just to add in, because it ties to the question that you were asking, ultimately building a business or leading a meaningful business is still one of the to create wealth. And when women do that successfully, it changes their family's financial trajectory, but it also gives them a platform for impact. Right. And so we're constantly thinking of those things. And people, just because they build a successful business, the families we talk to are very keen to think about that as part of the family in many cases, but they want it like a child to grow up, stand on its own, have a board, these kinds of things. So those are some of the discussions we get into.
Suzanne, as head of a business here, how do you think about talent, attracting and retaining talent? Every business owner, every manager I talk to, and almost every industry that Alex and I talk to, they say that as a challenge. It's not just the pandemic, it's just in general, sourcing and retaining talent. How do you guys approach that?
We are a people business still. We just had a really great conversation about AI, but we also talked about the whole human element to delivering what we do across the board. Wells Fargo is invested all the way from sophomores in college, where we start to take them at a very, very early stage and help them evolve through their career. And we look at that. We think about all the investment in our people, because if we're investing in them, they're investing in our clients and caring for our clients. So there's a lot of robust training programs and development that we have still continued to invest in a great deal. And then I think Wells Fargo also is really supportive of bringing in talent from a lot of other directions, traditional and non-traditional. I think that makes up, and then we all kind of come together under a culture that's very, very client-centric and team-oriented team members, so helping people grow and develop. But I couldn't agree with you more. Our clients are focused on the same challenge on how do we grow and develop. Being in the Southeast, we have a really great presence in the Carolinas and Charlotte, North Carolina, as well as other major hub cities around the country. But not only is it a great economic region for our company, too, we're investing a tremendous amount here in people and talent in the Southeast.
We thank you both so much. It was a really great conversation. Thank you very, very much. Suzanne Morrison, Executive Vice President, Head of Commercial and Wealth Partnership, and Jessica Murphy, Managing Director, Southeast Division Executives, for talking through that relationship with commercial banking and private wealth and how to help small businesses really grow. Much more coming up from the Women Leadership Summit for Wells Fargo right here in South Carolina. Kwanzaa Jones is CEO and co-founder of the Kwanzaa Jones and Jose Y Feliciano Initiative. It's all about philanthropy and how do you do that and build wealth at the same time. Julia Caperton will be joining us from Wells Fargo as well. Much more coming up. This is Bloomberg Intelligence. Happy Wednesday.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. I'm Alex Steele alongside Paul Sweeney, and we are live from South Carolina, Kiowa Island, at Wells Fargo's Women in Leadership Summit. We've been talking with a great many women leaders at Wells Fargo on how to bring wealth and small businesses up to speed. And in the next hour, we're going to be talking about how to do that with philanthropy. We'll be talking to the private bank and Wells Fargo head for wealth and investment management, Julia Caperton, as well as Kwanzaa Jones. She's a philanthropist, and how those two arms wind up going together. Plus, Mandeep Singh will be joining us from New York at Bloomberg Intelligence, senior tech industry analyst, to talk about Qualcomm and potentially a bid for Intel and what that means in terms of the election. And Allison Williams, Bloomberg Intelligence senior analyst for global banks and asset managers, on Morgan Stanley's phenomenal earnings. That stock now sitting at a record high. But let's get it all kicked off for you. And here is John Tucker with your Business Flash.
All right, Alex and Paul, major stock averages mixed right now. Let's start with the financials, since you brought it up, Alex. Among the best performing industry group in the S&P 500. And, of course, that's where you find shares of Morgan Stanley. Those shares are right now up close to 8%. Traders and bankers joining the rest of their Wall Street rivals, posting better than expected results. We're going to take a deeper dive, of course, in just a few minutes. United Airlines Holdings rising close to 9% as earnings beat estimates. And ASML's chief executive said he expects a slow chip market recovery to extend well into next year. This, of course, follows the disappointing third quarter earnings that sparked the broad sell-off across semiconductors yesterday. Investors waiting for the next piece of data to chew on. That comes with retail sales. That's out tomorrow. Also on the policy front, Garrett Melson of Metaxas Advisors sees more Fed rate cuts on the way.
At the end of the day, the bigger risks are for inflation to remain skewed to the downside and unemployment to remain skewed to the upside. And I think that gives them enough cover to continue easing it, even if it is a little bit more modest of a pace.
And Labor Department out with more inflation data. This is core import prices when you strip out oil, rising at the fastest pace in 4 months for the month of September. S&P 500 5 points higher, up just about 1/10%, 5820 on the index. The Dow Jones Industrial Average is up 207 points. NASDAQ 100 right now 48 points lower, down 0.25%. And quick look at Treasury's 2-year yield, 2 basis points lower, 392. The 10 right at 4%, down 3 basis points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, JT, we thank you very much. We are broadcasting live here from Kiawah Island, South Carolina. I've been here before. This isn't my first rodeo at Kiawah. They know me quite well here, but we're here at the Wells Fargo Leadership Conference here with a lot of great guests. We're going to have some more coming up here. Looking at the market here, as JT was just reporting, kind of a mixed outlook there. We got the Dow up a couple hundred points, the S&P's hunched, and the NASDAQ's a little bit lower. But I tell you, it's all about the banks, I think, over the last couple of days, Alex. We've had some really strong earnings, capped off by Morgan Stanley today, and that stock is seeing a move higher. Let's check in with Nora Melinda. She joins us now. She covers all the equity markets for Bloomberg News. Nora, what are you looking at?
As you said, it is all about the banks, and I've got my eyes on Morgan Stanley. That's ticker MS. We are seeing this as one of the biggest percentage gainers in the S&P 500, and we've got the stock rallying as much as 8%. That's the best day in almost 4 years. That's on an intraday level, and it's hitting its highest intraday level ever. And this is after a 32% profit jump for the third quarter. And the company has risen about 30% this year, but it's joining the rest of a lot of the Wall Street rivals in reporting some really stellar earnings. We have Evercore saying that improving market conditions will likely push estimates and the stock much higher.
Chasing that upgrade, chasing the rally at this point. Also, United Airlines, that they didn't do as terribly.
I'm flying them today.
Oh, you are you?
That's my airline.
I'm a Delta girl. It's because he's
Mr.
Jersey.
Sweeney,
Likewise, Delta
But that
here.
stock is like 9%.
Yep.
But it's 9%. This is a solid move.
Yep.
It is a solid move. And of course, this is after the company reported fourth quarter profit meeting expectations from Wall Street. But not only that, it also authorized a new $1.5 billion share repurchase plan. So this is really why we're seeing the stock rallying here today off of this news. And we're seeing the biggest intraday gain since April and highest intraday level since February of 2020.
I mean, the stock's up 70% year to date. This is an airline.
Yeah.
The business stinks. The margins are low. Fuel costs are terrible.
But here's the question. Does this come at the expense of low-cost carriers like Spirit and Southwest, right? Like if they're shaking off that pressure from, say, the cheap summer fares, Nora, like does that bode poorly for other areas of the airline industry, like a JetBlue, like a Spirit, like Southwest?
Right. I mean, that's definitely the question. But I mean, as we're looking here at United specifically, they did shake off a lot of the pressure that we did see from the cheaper summer fares, and that's what a lot of analysts and investors have been skeptical of. So seeing them be able to jump over that bar has really been where we're seeing this positive sentiment coming from here.
Yeah, and you're the CEO, Scott Kirby, talking they already cut their unproductive flying planes back in mid-August, so they're all getting it together. Hey, Nora, thanks a lot. Really appreciate Nora Melinda joining us. We're Bloomberg News, taking a look at some of the big earnings movers in the markets. Well, as we've been saying, we are here in South Carolina, Kiawah Island, at the Wells Fargo Women Leadership Summit, where we gather lots of different people in Wells Fargo who help build up women leaders, and then the women leaders themselves. And we're very pleased to welcome the philanthropic arm of this. Kwanzaa Jones is CEO and a philanthropist. She joins us. Let me just get the name here real quick for you.
Kwanzaa Jones,
there
CEO
we go.
and co-founder
Of Kwanzaa Jones and Jose y Feliciano Initiative. I wanted to make sure I got that whole title. And Julie Caperton, head of the Private Bank and Wells Fargo Partnership for Wealth and Investment Management. Now, apparently Julie was on stage, and we had Kwanzaa come in and was sitting, and then when Julie came running to the set, they hugged and they were chatting, and they like seriously love each other. What is your relationship?
Well, you want to start, Julie?
Sure, absolutely. So Kwanzaa is one of our clients and a good friend and an inspiration to me and to really our entire team.
Did the relationship start first, or did this close relationship happen over time as you were building a business, Kwanzaa?
The latter is what it did. And, you know, it's just been, I'm incredibly just overjoyed to be here with Wells and to be here with you, Alex, as well as Paul. And the thing that's amazing is that That's what this Women in Leadership Conference is about. It's about connecting, it's about community, and that's what having partners and really strong partners does really, really well. So thank you all.
Kwanzaa, talk to us about your initiative, the Kwanzaa Jones and Jose Feliciano initiative. Tell us about that.
Okay, I'll tell you a little bit about it. There are 4 key pillars, and it's education, entrepreneurship, equity, and empowerment. And I like to say that those are the common denominator of things that help elevate humanity and elevate society. When you have people more educated, when there are more equitable opportunities, when people are entrepreneurial, which means innovative ideas. And I say you can do those 3 things, but if you're not empowered, if you don't get off your tush and do something, then nothing happens. So that's what the initiative does. It really invests in those 4 key areas. And by investment, it's not just for-profit investment, it's actually not-for-profit investment too, and that's where a lot of the things comes into play with some of the partnership that we have.
So how did this relationship wind up working out? So you started a foundation and you're like, hey, I want to grow it. This is what I want to do. Kwanzaa, talk to me about that.
Okay, well, I have to go really, 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 really far back.
We got time.
Okay, here it is. We've got, but do you have decades? Because what I like to say is, decades in 9 minutes, and go. I like to say that I dream in decades, and I've always dreamed in decades. Undergraduate, I went to Princeton, and there at school, it's always about service, and Princeton being in the nation service and in the service of all nations. And for me, being a longtime client of Wells, and I mean a long time client, back when I was in high school. And then it's just followed me throughout all my endeavors and pursuits, and that's what's been really great. So I think it wasn't about starting the foundation and then finding the partners. It was about dreaming and having the vision and knowing what it was it wanted to be accomplished, and then finding the partners along the way. And Wells and just happened to be a partner along the way.
Julie, talk to us about your side of the business. What's a typical client for you? What types of services do you try to bring to them?
So as the head of the private bank, I work with our high net worth client segment, but that really spans, from people who have investable assets around $10 million, all the way up to the multi-billionaires that we work with. And really our mantra, and what I like to say is, we like to meet our clients where they are. We have every product and service that you could ever need as a large financial institution, but the reality is that's not what it's all about. It's about the personal relationships. It's about listening. It's about understanding what your clients need and bringing those products and services to help them achieve their goals. Lots of people have products and services. The reality is that piece of the business has really been commoditized over time. And what the business is about is understanding our clients, understanding their goals and needs, helping them achieve them in a way that feels comfortable for them and that a way that adds value to them. The most important and precious commodity is time. It's the one thing that you can't replace. So when I think about what we can do for our clients, it's really how can they leverage us so that they can have more time to do the things that they want to do.
So what are some of the typical questions that you're getting right now from your clients like Kwanzaa or high net worth individuals? What are they asking you?
Yeah, so a lot of focus right now on tax planning and estate planning, particularly as it relates to the estate tax. We have a sunset, coming at the end of the year. Regardless of what happens with the election, you can, sort of prognosticate on where that's going to go. But a lot of people are thinking about philanthropy as a way to think decades forward, right? Like, I love the way Kwanzaa talks about dreaming in decades. When she and Jose are thinking about their foundation, they're not necessarily thinking about 10 years from now. They're thinking about 100 years from now. And we have a lot of clients that really are thinking about that, paying it forward.
So Kwanzaa, what's a typical effort that you guys get involved with at your initiative? If it's a typical company or typical client
or grant or something.
Oh my goodness, all of the above. Where's the box where you check all of the above? Because it is, but I would like to say that it's in a really focused way, and it's not only at times, and I'm going to say this, and I don't want to be dismissive of it, anyone's place and space at all, is that money can be the easy part. And when Julie is talking about, hey, certain things have been commoditized, for Jose and I, it can be the easy part, but it's not the most impactful part. What can be done is there, but it's actually doing programming along with doing the money and the financial and the capital support. So what we do, and we're getting involved in something, it could be businesses, like diverse businesses. And I like to say that we invest intentionally, but not exclusively, in underrepresented businesses. So being here at a women's event, that could look like we are investing in women's sports businesses. It could look like we're investing, for example, at Princeton. There was a pretty significant gift that we did a number of years ago, and there are actually dorms named after Jose as well as named after me, because its representation also matters. So we do a lot of things, but the programming element is what we're really excited about, as well as the philanthropic underwriting financial capital element too.
How has that vision or donation or grants or businesses changed throughout the decades that you've been working on this?
Oh my goodness. I will say it's interesting because how we go about doing some of those things, and Wells has been a great partner in this, is there are many ways you can give. You can say, okay, I'm going to send a wire. Okay, I'm going to write a check, or, oh, I'm going to do stocks and do things in that way. So it really is, how do we go in and try to be strategic? Because again, as I say, dreaming in decades, we're not thinking about just our generation. We're thinking about centuries from now. How are we going in and changing things so that 100 years from now, when we know our organization is still going to be around, 200 years from now when it's still going to be around, how do you set things up